We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Welcome back to the European market open. A minute to go until the start of cash equities trading. Here are your headlines. Stocks push higher amid falling US jobless claims and a weak tips auction suggesting confidence in the Fed's view on inflation. European finance ministers meet in Lisbon today in person. That's as EU negotiators back vaccine certificates in a bid to save the summer. And Israel and Hamas agree to a ceasefire ending a deadly 11-day conflict. President Biden praises the accord brokered by Egypt. Let's take a look at the futures picture then for you. Just 20 seconds until the start of Friday's equity cash session. And European equity markets pointing to the upside, futures pointing to the upside. It does seem as if markets are a little bit more relaxed about a potential inflation threat as we've gone through the week, and perhaps a little more relaxed about what the Fed might do about that. 162 is the yield on the US 10-year, so not all that far from where we started the week after we saw that volatility in the middle of the week, well, a week or so ago around CPI, and in the middle of this week around the Fed minutes. There was the higher CPI print, there was the talk of tapering, but we're still sort of as we were in terms of the US 10-year story, and perhaps that gives stocks a little bit of breathing space. With that in mind, how do we open up this European equity market session? We've got European stocks fairly flat actually this hour. We've got the FTSE 100 fairly flat, the Stock 600 opening up by around 0.1%. US futures point to the upside, but just modestly so, up by 0.2% on NASDAQ futures, E-minis and Dow futures. That in the context of some pretty strong gains, certainly on the NASDAQ yesterday, up by more than 1.7%. So the FTSE sort of struggling to keep its head above the flat line, but the CAC 40 opening to the upside, up by 0.3%. The Xetra DAX yet to open. The IBEX in Spain fairly flat. So perhaps we'll see London held back a little bit by what's going on in the basic resource space. That's certainly been something that China has been speaking out about in recent sessions. The Asian equity session moving to the upside by 0.3%, but actually that hid quite a lot of divergence within those various Asian equity markets. And in terms of the sector picture, just having a quick look there, and we do see basic resources as one of the laggards, also the banking sector though, and so that could limit the ability of European markets to advance if we do see weakness in the banking stocks. So European equity markets then opening just modestly to the upside this morning. Asian stocks have been steady after a Wall Street rebound. That's as traders weighed the economic recovery from the pandemic, as well as the possibility of reduced US stimulus. Joining us now is John Bilton, JP Morgan Asset Management Head of Global Multi-Asset Strategy. John, good to speak to you. I wonder how you see the sector performance here in Europe playing out then, because it's interesting to me to see basic resources and banks are the two sectors in negative territory today in Europe, and they're two sectors that have done well on the certainly in the initial phases of the reflation trade. People thought that might be good for banks, and we also saw that translation from higher commodity prices coming through. Now we see a time where people may be rethinking that. What do you make of that weakness in basic resources and the bank sector?
I don't really think it's rethinking a long-term theme, let's be clear. But, these are sectors which have actually had a reasonable run, and they've been very geared to the whole reflation trade. You mentioned in your opening remarks some of the moves in tips markets and the weakness of auctions there. And it does seem that we've got quite a lot of positioning that's been across the markets in a range of instruments sort of pointing to that, full-throated reflation trade. And I think that what we're seeing perhaps is that, there's a little bit more two-way risk in this. Certainly we've seen some huge inflation prints in the US, very driven by this jump in goods prices and commodity prices generally. But actually, if you dig beneath the surface, look at the services level of inflation, the picture is perhaps a little more benign. And once you get outside of the US to Europe, to Japan, etc., we're still facing some of those big disinflationary threats. Put it all back together, add in a sprinkling of, China, raising a little bit of a flag about the sort of commodity speculation, positioning where it is, and it's probably time for a breather. But the reality is we are seeing strong economic growth, a powerful capex cycle, and pent-up demand linked to both savings and the stimulus that's already been put on the slate. And that's something that we think will keep this cyclical trade going in the longer run. So this feels pause for breath rather than a reversal of direction in our view.
John, what does all of that mean for commodities then? Because you flagged before that, this might be the start, or there's a big debate about whether this is the start of a super cycle or whether we're in a super cycle for commodities. I wonder when we know, when do we get an answer on that? When do we get to fully understand the scale of what we're seeing on commodities here? We have to sort of work through some of those year-on-year comparisons, I guess.
Well, I think, second only to the debate about inflation this year is the question about a commodity super cycle. And I'd certainly like $1 for every time I'm asked about it. But I think what's kind of interesting, when you look at commodities, we've got a powerful reopening trade going on. And bear in mind, also last year, huge amount of disruption around this time last year, of course, which means that the base effect is very powerful. There have been disruptions in the supply chain. There is a powerful growth impulse going around the globe. We expect above trend growth through this year and into next year, becoming more synchronous around the globe as the year progresses. What does that mean for commodities? Likelihood is that the demand drivers are still there. Does that mean we're going to chalk up a early 2000s style super cycle? Hard to say really, because there's a lot more supply discipline and we don't necessarily see the kind of big build out that we saw in China back then. But when we look in the near term, is there support for commodity markets? We certainly think so, but we would gear it more to the cyclical view on growth that we hold than necessarily throwing our hat in the ring on the super cycle discussion here and now.
Yeah, how significant, how relatively significant was the Chinese build-out versus a US infrastructure spend to come, John? An interesting thought. Let me ask you about oil prices and the pass on there, because I wonder how much of a higher oil price ends up being felt by consumers versus how much of the other commodities that we see on the rise being felt by consumers. Which ones of these get from mine to PPI to CPI? Which ones do we actually feel in our everyday lives?
Well, I mean, I think it varies from country to country, of course, but the big one's gasoline, petrol, and that's particularly the case in the United States, where the tax stabilizers that we see in so many places elsewhere have lesser of an effect. And there's a reasonable body of work that points to gasoline prices having a reasonable linkage to inflation expectations. And make no mistake, we've seen the inflation expectations in things like the University of Michigan survey pick up quite markedly. And this is something, of course, the Fed are watching, which is one of the reasons why folks have been watching the Fed's minutes so very, very closely. But the question is, we've seen not just oil prices pushing through, also had some disruption linked to pipeline events in recent days. So I think that some of the volatility there, some of that upside on gasoline prices is causing households in the US to have that pause for thought on where they think prices are going. But against that, we have to remember that it is near-term volatility and it can clear quite quickly. There's solid demand for energy, as you'd expect during a period of strong economic growth. But when we actually look at the overall picture, our view is that there are many, many more factors to think about, not least the savings rate, which will actually buffer some of these near-term more volatile series.
John, thank you. Stay with us. John Bilton, JP Morgan Asset Management, Head of Global Multi-Asset Strategy. Thanks for your thoughts so far on the European market open. Coming up right here, Europe's road to recovery. EU finance ministers meet today as optimism about the bloc's economic rebound grows. We'll get more on that story next. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Welcome back to the European market open. 10 minutes into our trading session, and European equity markets looking positive, up by 0.2%, but the FTSE a bit of a laggard. Let's get some of the stocks on the move this morning. Here's Danny Berger.
And a biggest stock to the downside so far this morning in the Stock 600 is Lufthansa. Their biggest private holder, which is KB Holdings, is sold about half of its stake. It owns about 12% of Lufthansa, selling it at a discount. So that, of course, is knocking prices lower. Now, to the upside, and indeed the biggest gainer is Richemont this morning, out with earnings. Really strong showing for them that analysts say really shows that they've had this rebound, and it bodes well for the rest of the year. Sales look very strong in mainland China, and Jefferies calling their jewelry sales outstanding. So that accounting for a lot of that more than 5.5% increase this morning. Finally, another stock to the upside this morning, Travis Perkins selling their plumbing unit to HIG for about $460 million. Jefferies also, Peel Hunt rather, commenting on this one, saying that it's going to allow Travis Perkins to focus on their core business. Finally, just a quick look at the macro picture. Anna, you talked about this earlier, but we really are seeing those inflation concerns just aren't in the market today. Maybe it's good news is good news from yesterday's stronger weekly jobless claims. Perhaps it's that weaker tips auction showing that there's not that demand for that inflationary protection, or it could be the supply chain bottleneck slightly easing. And you can see copper behind me, prices also dipping this morning, Anna.
Danny, thanks very much. Danny Berger with a heads up on some macro movers and some of the stocks on the move this morning. Now, EU finance ministers gather in Lisbon for the first in-person Eurogroup meeting since September. As the bloc's vaccination campaign advances, optimism about a strong economic recovery is growing. The Irish Finance Minister, Pascal Donohoe, and Portuguese finance ministers spoke in a joint joint interview with Bloomberg's Maria Tadeo.
I believe the optimism about the prospects for the euro area are justified. If you look at where we are from a vaccine point of view, we now have over 30% of European citizens have received a vaccine. And I believe we will deliver our target of a large majority of citizens receiving and being vaccinated by the summer. So this, combined with really good and sensible economic decisions, mean that we should be optimistic about our prospects for the second half of 2021, leading into a strong start for 2022. And therefore, I do believe it is possible that we will see further revisions in our growth expectations as we move through the year.
So that's bullish also on that note. And Minister Joao, in the case of Portugal, I know that the central bank is already saying we could see an uptick in growth. We're seeing that this week you're reopening for tourism. It's a key sector for your economy. How optimistic are you about the prospects for the Portuguese economy?
We are becoming very optimistic. We went from a very strict lockdown in the winter, very tough, intense, but now the vaccination program is working very well. The number of cases is extremely low. We're opening up already most of our economy, and the numbers remain very low. And now the tourism is back. So we are actually very optimistic. We expect that the GDP growth is going to be higher than we submit last month, because the numbers now, for example, just a quick number. So if you look at the consumption numbers of last month, they are already higher than pre-pandemic levels. So it's a signal that the recovery is underway. And
would you say, just to rub on this issue, when the market looks at the recovery and they assume that the same dynamics that are driving the U.S. economy and especially the debate around inflation, is it wrong to assume that the same thing will happen in Europe? They're two different recoveries in nature?
The recovery in every part of the world, I believe, is likely to be different because even though we've experienced a common difficulty in the pandemic, it has experienced and affected different economies in different ways. But here in Europe, if I look at where we are, I think it is to be expected. We will see a change in price levels as companies in Europe try to get more raw materials, try to hire staff, try to reopen supply chains. And I believe it is to be expected that you will see a shift in inflation, but I believe it will be temporary. And the reason why I believe that will be the case is if you look at other economic indicators, for example, where we are with unemployment, where we are with underemployment, I expect to see big improvements in those areas across this year and next year.
The Irish and Portuguese finance ministers speaking to Bloomberg's Maria Tadeo there in Lisbon. John Bilton, JP Morgan Asset Management Head of Global Multi-Asset Strategy, is still with us. And I wonder how optimistic you are about the European growth story, John. And just to add into that, we're getting French data coming through on the PMI front. Manufacturing PMI 59.2, ahead of the forecast 58.5. The services PMI 56.6, that is quite substantially ahead of the forecast of 53. So as if to underline the point, I suppose, those numbers from France coming through quite strong. How optimistic are you about the European story right now?
Well, we continue to be pretty optimistic in Europe, and for a number of reasons. Firstly, where the US economy led at the beginning of the year, having followed a fairly rapid vaccine rollout and reopening, we now see Europe really following on. And we think that, there's certainly appetite really to begin to reopen the economy more broadly. There's a level of caution, which is entirely appropriate, of course. But what that means is there's also huge pent-up demand on behalf of consumers. There's an excess of savings. There's the significant fiscal response that the European Commission have already had. And all of this, when we put it together with that reopening, I think gives some reasonably strong outlook. Now, we know globally the goods market has been generally pretty buoyant, and internationally that's worked very well. It's held up PMIs and other survey data across the globe, but services have been the laggard. And I think as we're seeing that strength starting to come in and that confidence building, I think that's a good thing for the outlook for Europe. Add into that, of course, we are in a world where, despite the question marks about inflation and has it been priced a little bit too aggressively, which we think it may have been, it's certainly going to be higher than it was in the last cycle, we believe. There will be, we believe, more activity, so put it all together, and that supports those cyclical regions. And it's worth noting that Europe continues to be a very good proxy for global growth in general, and that's why we continue to be overweight towards Europe in so many of our portfolios.
So you're overweight on Europe. It's a good proxy for global growth. How much can Europe achieve without its bank sector rallying, John? I was looking at the European bank sector. It's nearly back to pre-pandemic levels when you look at the Stock 600 banks index. Inflation, and talk of inflation and reflation and steepening yield curves and the rest, all of that boosting prospects perhaps for the banking sector. Does that carry on from here? Do we take out those pre-pandemic levels and then continue?
Well, I mean, getting the banking sector back to pre-pandemic net levels is hardly a sort of cause for a lap of honour. Let's face it, the European banking sector had been under massive pressure since the Eurozone crisis. But make no mistake, you know, some of the regulation, the changes in capital rules, and generally the cleaning up of balance sheets has left it as a much leaner sector. Bear in mind, it's only now about 7% of the overall index. And so as a result, it's not the huge, heavy overhang that it was on the downdraft. Now, what does that mean, really? Looking forward, can banks alone drive Europe higher? Probably not so much. Will they contribute to it from the basis of around 0.6 times tangible book value when you look at their prices? I think that there's a lot of upside there, especially when we look at the comparison in the United States, which is 1.2, 1.3 times. So there's a big valuation gap, much cleaner balance sheets, a European recovery, which we believe will have some legs to it. Put that together, the banks could certainly run, but bear in mind, when you're talking single-digit component of the index, you are looking for a more synchronous recovery rather than just being led by the bank sector alone.
John, thanks very much for joining us. Good to speak to you. John Bilton, JP Morgan Asset Management, Head of Global Multi-Asset Strategy. John will be continuing his conversation with us on Bloomberg Radio. That's at 9 a.m. UK time, so in around 40 minutes from now. Let's get a Bloomberg Business Flash. Some of the top corporate stories we're covering this morning. Here's Laura.
Thanks, Anna. Morgan Stanley's chief executive has unveiled his biggest leadership change in over a decade with a slate of potential successors that mostly resemble the old guard. Just days after JP Morgan pushed two women towards the front of the field to succeed Jamie Dimon, Morgan Stanley's top picks are all white and male. The bank says it's committed to developing and promoting diverse talent at all levels. Lufthansa's largest private shareholder... Oh, we've just lost that story, Anna.
Laura about to give us an update on what's going on at Lufthansa. We certainly have had some news flow, that coming in after hours yesterday. I can tell you the Lufthansa share price down by 6% this morning. Let's move on to things geopolitical. Coming up on the programme, Israel and Hamas implement a ceasefire early this morning, ending 11 days of conflict. We bring you all of the details next. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Welcome back to the European Market Open. 22 minutes into Friday's trading session, and things looking broadly positive, but the London market lagging a little bit. The banking sector and basic resources on the back foot a little this morning, and so the FTSE 100 down by 0.1% or so. Elsewhere, making some modest gains, and more than modest, over in Paris. Let's return to some of the geopolitical themes that we've been following over the last 10 days or so. Israel and Hamas have begun implementing an Egyptian-brokered ceasefire, ending an 11-day conflict that has left hundreds dead. US President Joe Biden has praised the truce, which came amid growing international pressure to end a barrage of airstrikes from both sides. For more, we're joined now by Bloomberg's international executive editor, Ros Matheson. Ros, good morning. Thanks for joining us. So what are the next steps now that a ceasefire has taken effect?
Well, what really needs to happen now is to get that ceasefire secure and working. It's still very early hours afterward. I mean, we saw some very jubilant scenes on both sides, both in the Gaza Strip and in Israel overnight, as the air raid sirens felt silent for the first time in about 11 days. There's a lot of relief there. The question is, how do you make it stick? And how can you make each side now communicate with each other through intermediaries to make sure that does happen, primarily the Egyptians, who have done the really hard lifting this time on getting to the truce. What mechanisms need to be put in place to sustain it, particularly as there will be parties who have vested interest in seeing it resume, and you can get the kind of isolated incident that unfortunately kicks things off again. So what kind of systems do you have there? And more broadly, does the Israeli Prime Minister, Benjamin Netanyahu, feel like he has done enough to degrade Hamas's military capacity? Does he feel like he got what he wanted out of this? And does Hamas in turn feel it's done enough to better establish itself as sort of the leading voice for the Palestinian people in the region, politically speaking, because they've got quite a strong rivalry with the Palestinian Authority?
So I guess for some of the reasons you just outlined there, Ros, there is always a risk that fighting breaks out again.
Well, that's right. And you've got very long-running complex issues that have underpinned all of this. And the Israeli versus Palestinian issue is just one part of that, the disputes that we have over territory, over homeland, over rights to housing. These are things you don't fix with the ceasefire. And you've had very intense communal violence in the mixed quarters of Jerusalem running alongside this, scenes of buildings on fire, synagogues on fire, people covered in blood and so on. And does that taper off too? And then you've got the issues particular to Benjamin Netanyahu and his hold on power, and for Hamas itself. So a whole collection of complicated problems. And as we've seen from history, these tensions tend to dial down for a while, but they don't last. And we're not seeing at this stage any indication that any country, including the US, which is talking more about quiet diplomacy, really wants to take the lead in trying to resolve some of those broader issues and have a longer-term peacekeeping process.
Ros, thanks very much. Ros Matheson, Bloomberg's international executive editor. Thank you very much for joining us, bringing us up to date with the latest developments that, as she points out, have a very long history. So we'll keep across all of that geopolitics and bring you any developments as they come through. Now, coming up on this program, the rise of mega firms. Giant corporations are getting even bigger. How is their dominance influencing the global economy? We'll bring you more on that big take story coming up next. How much tax is paid by these big businesses, and how much have we seen growth in their profitability? All of these really interesting dynamics coming together in this big take story this morning. We'll bring you the latest on that from the Bloomberg Economics team. That's coming up next here on Bloomberg. This is Bloomberg.
traffic.
Okay.
During the pandemic, no traffic at all.
Okay. Where do you see the oil market in about 20 years or so?
Non-existent.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Welcome back to the European Market Open. We are half an hour into the European trading day, and this is the picture for you. We're up by 0.3% broadly across these markets, doing a little better than that over in Paris. The FTSE 100 lags behind a little. Let's have a look at the sector breakdown, then give us a few clues as to where these gains and losses are coming from this morning. You can see that autos and auto parts doing pretty well, up by 1%. That obviously speaks to the German market quite strongly. Basic resources on the downside. That is the only sector in negative territory. Some of the luxury goods names doing okay this morning as well, and that can obviously play to the advantage of France. So that kind of explains why we're seeing what we are seeing across these European equity markets this morning. Just to get some breaking news from Germany, we had the numbers out of France earlier in terms of PMI. Now we get those German numbers, and the French numbers looked strong in terms of being better than was estimated. Not quite so the story for Germany, although we do see a lot of growth in manufacturing, certainly. So the May manufacturing PMI coming in at 64, that is weaker than the 65.9 anticipated, but it is still well above 50. I mean, 64 is very high relative to history. The services PMI number rising to 52.8 against a forecast of 52, so broadly in line as Germany starts to make some slight moves away from the lockdown story that we've seen dominating there. Now, let us get a Bloomberg First Word News update. For that, here in London is Laura Wright. Laura.
Thanks, Anna. The US is calling for a global minimum corporate tax rate of at least 15%. That's less than the 21% it had proposed for the overseas earnings of US companies, a level some nations said was excessive. Treasury Secretary Janet Yellen has argued for an end to a race to the bottom on taxation. Negotiators at the OECD are hoping for a deal this summer. The number of UK cases of the coronavirus variant from India has more than doubled for a second week. Health officials are also monitoring a new mutation of the virus. It's adding fresh doubt to plans to fully unlock the economy next month. Still, the government is increasingly optimistic about the effectiveness of vaccines. More than 70% of UK adults have now had at least one dose. The European Union is backing the introduction of vaccine certificates to allow quarantine-free travel within the bloc. It's offering the region's battered tourist industry a chance to salvage the summer season. The passes will be issued free of charge in digital or paper forms. They'll offer proof the holder has been vaccinated, has recovered, or has had a recent negative test. China has defended retaliatory sanctions on the European Union. That's after the bloc's lawmakers voted to freeze an investment deal agreed late last year. The European Parliament cited the restrictions as the reason for the move, calling them baseless and arbitrary. Lawmakers say no talks on ratifying the deal will be held while sanctions are in place. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Laura, thanks very much. Laura Wright here in London. Let's turn to today's big take story that focuses on the rise of mega firms. Gone are the days when IBM and ExxonMobil topped the list of the world's biggest companies. Now tech titans like Apple and Amazon are dominating. Today's corporate giants are bigger than ever, and they're challenging policymakers who may want to rein in their power. Let's take a look.
The world's biggest companies are cashed up and thriving. Last year, the top 50 raked in nearly $800 billion in profits. That's equivalent to almost 1% of global GDP. Let's break down the trends. 30 years ago, there were no Chinese firms in that group. Now there are 8, and tech titans are on the rise, from 3 companies then to 21 now. Mega firms are changing the look of the economy. They're hiring fewer workers, more likely to add capacity in the cloud than build a new factory. When they do invest, they often have enough cash without having to borrow. And they're paying less tax, too. The median rate for the world's biggest companies has dropped from 35% in 1990 to 17%. President Biden's corporate tax plans and China's regulatory crackdown both suggest policymakers are trying to rein in the mega firms. And history shows, at the start of the last 3 decades, around half the top 50 companies have been new. So maybe they shouldn't get too comfortable.
Our big take story there on the rise of the mega firms. Joining us now for more, our executive editor for Bloomberg Economics, Simon Kennedy. Simon, good to see you in person in the studio. Very nice to have you on the program. So this research looks at just how big these businesses have become and the rise of these mega firms. So how big are we talking here? How big are these businesses?
They're big, and they got bigger last year during the coronavirus, which allowed them to benefit, if that's the word, for a year of a pandemic. But they certainly were able to take advantage of business models, in the case of companies like Amazon, which were built for social distancing. They probably didn't realize it at the time, but that's what they were built for. And so they benefited from that, and they benefited obviously from government support and from central bank stimulus. So they've got big. Let's look at some of the numbers here. Collective stock market capitalization, about 30%, surged to about 30% of global GDP last year, just 5% in 1990 for the similar firms back then. Median profit margins fattened to 18% from 7% over the same period. On the other hand, effective tax rate, that fell to 17% from 35%. And so these big numbers just represent how more important they are to how our economies operate, both for good and bad.
And so does this suggest a group of businesses that are bigger and more powerful? Does that come through in the data?
Absolutely more powerful. Perhaps not so much in the data, but the assumption. This is what you're seeing when China looks at Alibaba or the Biden administration talk about higher corporate taxes. The worry here for these governments is that these companies, how they use their might. Do they use it to the disadvantages of small businesses? Do they use it to the disadvantages of workers? You already see some companies, there's less access to benefits. The wages are more compressed. One of the things you've seen in recent decades is this worry about wage growth. And so all these things stack up. And if you're a government who relies on voters, not companies to vote, this is a concern. And certainly when you're seeing administrations such as Biden come in after Trump, this is going to be a big talking point. You saw Janet Yellen kind of talking to it this week about the fairness of the tax system.
Yes.
So obviously there are benefits from these companies. We all like our book deliveries a day later, but there are also downsides for the broader economy, for broader society, as the economists point out.
Now, during the pandemic, I discovered my local bookshop will walk the book round, so it's just even faster. Simon, where is the money all going then? So if these businesses are making more profits but paying less tax, at least on a percentage basis, where is all that cash going?
Well, they're rewarding their investors, their dividends and the like. One interesting finding from the study: there's a cash pile. They're sitting on a cash pile of $1.8 trillion, which is 5 times what they spend on a business investment. Another interesting data point: IBM back in 1990 spent about 9% of what they had on investment capital spending. Apple last year just 3%. So the money is being sat on. Obviously they're investing it to benefit themselves. We saw a story this week, Amazon potentially buying the film studio MGM. So they're looking for business opportunities. When you look at the governments, they want to correct that and hopefully find a way of benefiting society as well.
Yeah, that's really interesting, isn't it? An efficient financial system should be finding ways for that money to be invested, shouldn't it? And these businesses sitting with it as cash, maybe they have ideas of investing it in the future. Thank you very much for bringing us the story. Simon Kennedy with us this morning. I thanks to our executive editor for Bloomberg Economics, Simon Kennedy, with us to take us through the big take. And if you want to find more on that big take story, you can go to the terminal, of course. Coming up here on this program, is hybrid working the next big disruption to the way we work? We'll be speaking to the president of Microsoft for Western Europe about the way that work is shifting. We'll discuss that blended model of working and how firms are addressing the diverging needs of their workers. That is next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
We don't want to declare victory prematurely, but if we can get the 70% of adults vaccinated with at least one dose by the 4th of July, the way the president has set the goal, I think the chances of there being a surge or a rebound is extremely low. That's the reason why we want to continue to get people vaccinated.
That was Dr. Anthony Fauci, director at the National Institute of Allergy and Infectious Diseases in the US, speaking to Bloomberg just yesterday. Now, the pandemic has forever changed the way we work, career progression, and how we manage our work and life balance. So what will the future of work look like as vaccines roll out across the world? In a nutshell, will it be hybrid? Microsoft thinks so, according to Microsoft, which says that we're on the brink of another big disruption with the shift to a blended model. For more on this, joining us now is Cindy Rose, Microsoft's Western European president. Cindy, good to speak to you today on this subject then, on the way that the world of work is shifting. You say that flexible work is here to stay. The talent landscape has fundamentally shifted. We're heading for a hybrid model. What makes you so convinced that we won't just go back to the way things were pre-pandemic?
Thanks, Anna. Good morning. Yeah, I think that for many businesses, managing out of this crisis will be even more complex than managing into it, because it really will require organizations to make that shift to hybrid work that you mentioned. And that means rethinking the employee experience. We've done a lot of research on this. employee expectations have fundamentally changed, and we feel that flexible work is here to stay. There is no going back. And as you say, I think we're on the cusp of some pretty significant workplace disruption. Our research shows that 73% of employees expect flexible remote work options to continue, and 40% of the global workforce is considering leaving their employer this year unless flexible work continues to be an option. So it really is critical to attracting and retaining the best talent in the future.
And Cindy, dare I say, you know, tech businesses have benefited perhaps from some of these hybrid models or work from home models, and so maybe you would like to see that come to pass to some extent. Others might have a different view. We took some soundings from 2 real estate managers with exposure to commercial buildings, so they might have a different view of the way that things will develop in the future. Let's just listen in to what they said.
As we move back to a hybrid model, and some people are in the office and some people are at home, there's going to be FOMO and what I call the Hamilton moment, where people feel like they're not in the room where that happens, and they're going to want to get back to the office to make sure that they're in the midst of the economic leadership and decision activity in their business.
It's tough to build a successful Premier League football team by Zoom. It's tough to field a successful Major League Baseball team by Zoom. That goes for corporate cultures and corporate winning teams. You got to be in the room with your colleagues.
2 real estate managers, that was Rick Lewis, Executive Chairman and CIO at Tristian Capital Partners, and Bill Benjamin, Partner and Head at Ares Real Estate Group, speaking to Bloomberg about what they see as the future. And clearly they've got some skin in the game too when it comes to commercial buildings. But how do you think then that the hybrid models can be made to work, Cindy, despite that, as it was referred to there, Hamilton moment, people wanting to feel that they're not excluded from the room where something important is happening?
Yeah, I think what those videos show nicely is that every organization's approach to flexible work will be unique. So at Microsoft, we've given our employees the choice going forward to work from home up to 50% of the time. But our experience in China, for example, where we've been practicing hybrid work for several months now, suggests that what's optimal for most employees is 3 days at home and 2 days in the office per week. I really think a mindset shift is going to be required, right? We're going to need to let go of the idea that people need to be physically in the office together from 9 to 5 to be productive. We need to start thinking of work as an activity and not a place. But having said that, as your videos show, physical space still matters because face-to-face human interaction helps people feel connected and build social capital. But those physical spaces will need to be redesigned to optimize for the people who are not in the room, so that remote participation continues to feel like a first-class experience, even in a hybrid work environment.
Yes, and what have you learned on that front about the way that physical spaces should be adapted, Cindy? Because I'm sure many of us have had experience of a small group of people meeting face-to-face and trying to involve those who are remote as well, physically remote, and trying to make sure that the whole thing still has the same momentum that you would like it to.
Well, it probably won't surprise you to hear me say, Anna, that I think there's a huge role for technology to play in terms of adapting meeting space. You know, offering live captioning and transcription, raised hand features, live reactions in chat, digital whiteboarding features for collaboration. So technology becomes quite important. But not only technology, I think it's important to have inclusive meeting behaviors. So just things like making sure that as soon as you get into the meeting room, you join the Teams meeting or whatever technology you're using, so that remote participants don't miss out on that informal banter that happens at the beginning of a meeting, because that's an important part of building social capital. So it's about redesigning physical space, you know, embedding technology to create a hybrid environment and adapting our behaviors as well.
So it's about the technology and also some of the ways we use it, Cindy, and the practices we put around it. But what about digital exhaustion? Because many people watching this who've been stuck at home for many, many months might be feeling a little bit fed up with the way that their meetings appear to be longer than they were. They've saved time on the commute, but they seem to spend it in more and more online meetings instead. What have you learned on that front, Cindy?
We've learned that working from home is hard, right? The amount of time that we're spending in online meetings has more than doubled in the last year. And people are struggling to switch off at the end of the day. And research shows that that can result in elevated stress hormone levels right through the night. So there's absolutely no doubt that employee mental health and well-being is a concern. And our survey shows that 39% of employees globally are feeling exhausted and 42% are feeling stressed. And, we don't have all the answers, Anna, but our advice is to set a strong tone from the top and engage your employees in conversation, right? It's about creating an environment where talking about mental health and well-being feels safe. At Microsoft, for example, we've encouraged our employees to establish boundaries, manage their workloads by prioritizing, maybe saying no to meetings that don't add value or recording them and watching them later, and taking frequent breaks so that they don't burn out. And we also empower them with data and technology. So, for example, our workplace analytics tools gives us a data-driven view of how we spend our time so we can make deliberate choices. Cortana, our digital agent, tells me when I'm in meeting overload and not getting enough recovery time. And new settings in Outlook automatically shorten my meetings to ensure that I'm taking enough breaks during the day.
Cindy, thanks very much. Thanks for joining us and for sharing the Microsoft experience. Cindy Rose, Microsoft Western Europe President. We should just tell you that Francis Le Maire is speaking right now. I think this is coming to us from Lisbon. Let's listen in.
Want to play in the first league, or do we want to be lagged behind by China and the United States? The willingness and the determination of France is to do all our efforts to have Europe remaining in the first league, remaining in the race of innovation, of new technologies, and remaining at the same level as China and the United States. In that case, there is a need for new investment, there is a need for more activity, there is a need for more investment in new technologies. We have to improve the growth potential of Europe. Coming back to normal is not the right ambition. Remaining in the race of technologies is the right ambition. We must improve the growth potential of Europe. This is, from a historic point of view, the key decision that we will have to take over the next month. I just want to conclude by a word on the question of international taxation. Just to tell you that 15%, the last proposal made by the United States, could be a good compromise. But the key question is clearly to have a compromise and an agreement about the two pillars, digital taxation and minimum taxation, as soon as possible. I mean, during the G20 in Italy at the beginning of July. The key question is not the figure. Even if we can live with 15%, it can be a good compromise between the different expectations of all members of the OECD. The key question is to define a global framework for digital taxation and minimum taxation, and to have a political agreement no later than the G20 of Venezia in Italy at the beginning of July. And I can tell you that we will not spare our efforts. We have been working for more than 4 years on this new international taxation system. France will not spare its efforts to pave the way for a compromise at the beginning of July.
Mr. Le Maire, just a very quick question. What you say right now, should we interpret this as you saying there should be more stimulus put on the table in Europe, or implement what's already been agreed?
The first step is the implementation. The second step is the disbursement of the European money, no later than July. And the third step, on which I think we should all together, the 27 member states, think about, is the question of new investment so that we can raise the level of potential growth in Europe. I just want to insist on the fact that even if we come back to the GDP pre-crisis level by the beginning of 2022, there will be a loss of 2 points of activity compared to the previous trend. If you are making a comparison with China and the United States, it is not the case in those two continents. What do we want? Do we want to play at the same level as China and the United States, or do we want to lag behind? I want Europe to play its role at the same level as China and the United States. This is the key question. This is not only an economic question, this is also a political and strategic question for all of us. Je n'ai pas parlé de plan de relance, nous parlons d'investissement. Et je veux vous redire en français quelle est aujourd'hui Notre attente durant cet ECOFIN et durant cet Eurogroupe,
that was Bruno Le Maire, the French finance minister, speaking to reporters in Lisbon at the ECOFIN meeting, the Eurogroup meeting. You can see speaking to Bloomberg there, speaking to my colleague Maria Tadeo. Interesting to hear his thoughts, calling for an increase in the growth potential of Europe. And when pressed by Maria to explain, does that mean further stimulus? What he was really talking about was implementing what's been agreed, dispersing what's been agreed, and then investing that money in higher growth potential. Interesting to get his comments on the US proposal around a minimum corporate tax of 15%. He doesn't seem to have a problem with that rate at 15%, but really wants to get to an agreement on digital taxation. We'll watch that story as it unfolds. Let's get back to the markets. Sven Raum, Bloomberg's Markets Live currency and rate strategist, is with us this morning. Sven, good to speak to you. A little calmer things appear to be in the markets. Is that because cryptocurrencies are a little calmer? We're up 0.1% on the stock 600. What do you think is driving risk appetite as we head into the weekend?
Morning, Anna. I think that, the markets are in a kind of a pause and reflect kind of mode, because we have seen real rates kind of climb higher this week, and break-even rates have fallen. So that's giving the rates market a lot of fodder to think. And of course, Bitcoin and the coin complex has undergone a whole lot of tumult. And, it looks like there is some kind of calm at the end of the storm of the Bitcoin storm that we have had.
Yeah, we did see that Bitcoin storm, and we've seen gold do pretty well, Ven. I don't know if that's something that's on your radar, and a lot of people talking about, comparing it to the volatility that we've seen in Bitcoin recently.
Obviously, gold is not going to do as well as Bitcoin can on a day-to-day basis, but on a volatility-adjusted basis, you will see that gold has done a lot better than Bitcoin, definitely, in terms of risk-adjusted returns this quarter at least. And gold is falling slightly this morning because real rates have come up, and that is going to kind of put a downside on gold in the short term. I expect gold to be treading water around current levels. As for Bitcoin, there's no particular model that can tell you where it will go, really, Anna.
No, I saw you earlier writing this week. It's a bit of a fool's errand to try and find some of the fundamental drivers of what's happening with Bitcoin. All I can tell you is it's not going anywhere very fast this morning. We certainly have a calmer picture there. 39,917, down by just 0.4%. Thanks to Sven Raum, Bloomberg's Markets Live currency and rates strategist. That is it for the European market open. Surveillance early edition is up next. We had some interesting data on the labour markets at the US yesterday. We look ahead next week to some PCE data out from the United States. So this is another measure of inflation. We'll get a bit of a better sense, really, of the preferred inflation measure at the Fed, what they are looking at. So we can expect a continuation of that inflation conversation. US yields 1.61 is the handle there now, so a little bit weaker on the yield story on the US 10-year. The early edition of Surveillance next. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be
the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Palestinians and Israelis equally deserve to live safely and securely and to enjoy equal measures of freedom.
The chances of there being a surge or a rebound is extremely low.
We are committed at the Federal Reserve to hearing a wide range of voices on the U.S. CBDC.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance, the early edition on Friday, the 21st of May. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Biden's team backs down on tax. The U.S. president proposes a 15% minimum tax on multinational firms, lower than 21% originally suggested. Ceasefire. Israel and Hamas agree to end an 11-day conflict in the Gaza Strip after the violence claimed more than 200 lives. And the EU backs vaccine certificates to ease cross-border travel this summer. The bloc's finance ministers meet today in Lisbon. Now let's get straight to our top market story. There is quite a lot going on. Of course, the main focus is not only on inflation, but some of the things that we've been watching, which is productivity and then everything in between on the back of earnings. Crypto also at the forefront. Let's get straight to our Danny Berger. Now, Danny, inflationary fears look to be easing this morning. Maybe the market is buying into the Fed's narrative that price increases will only be transitory.
Yeah, it certainly seems that way. Or, you know, perhaps it's the crypto space calming down means the rest of the market can calm down too. But whatever the driver is, it is really remarkable to see this big drop off and break even. So these inflationary bets, I'm looking at the 10-year here, falling about 4 basis points yesterday. And really the catalyst around this time was that tips auction. Decent to kind of weaker, but as you say, Francine, really shows that the market is now leaning towards sort of that Fed narrative of this less threatening inflationary picture. Now let's go ahead and see what the overall market is looking like today, because it is definitely more calm than we had earlier in the week. You can see U.S. equity futures doing well, be it the NASDAQ or S&P 500. Treasury is very calm as well, but one of the real standouts here is that the commodity space is weaker. Again, it's feeding into this overall narrative of perhaps the price increases in commodities won't get to a place where we have concerns about inflation and some of those supply bottlenecks easing as well. So overall, Francine, a much more orderly day to end the week.
Danny, thank you so much. Danny, is it your birthday? Because
it is my birthday.
Happy birthday, Danny Berger. Thank you so much.
I'm just waiting for some birthday Dogecoin. That's really all I want.
It was my surprise. There you go. The cat's out. It was Doge or the other one that I cannot pronounce on air because it's rude, but it's a hot new thing apparently. We had a good story on it. Happy birthday, Danny.
Thanks,
now, the United States is calling for a global minimum corporate tax of at least 15%. That's less than the 21% rate it has proposed for the overseas earnings of U.S. businesses, a level that some nations had argued was excessive. Now let's bring in our DC morning editor based here in London, Kathleen Hunter, with the latest. Kathleen, so is this actually a step back by the Biden administration?
I think it's
a recognition that perhaps, what they had initially targeted might be too high or too, really not graspable. I think it's important to remember that this is all happening in the context of domestic negotiations that are going on in Washington with Republicans in the House and the Senate, primarily in the Senate, about what is really going to be feasible in terms of what Biden is trying to propose in terms of his economic plan. And so I think that it is a step back and potentially a significant one, and a signal that Biden is trying to negotiate, not necessarily going to go for his initial offers on things, that he's willing to modify them if the signs on the ground are that what he initially goes for is too high.
Yesterday, Kathleen, I also spoke to the EU Economy Commissioner, Paolo Gentiloni, about the need for digital tax alongside a corporate tax.
Yes, and that has been a big issue that, goes back obviously through the Trump administration. It's been an issue that's tried to be, that the U.S. and European Union officials have been working on negotiating, and one that I think that, is going to be on Biden's plate. I think it's something to watch very, very closely as they go to the G7 in a few weeks now. That's going to happen in Cornwall in the UK, and I think that's going to be an issue that really is going to be significant to watch how Biden plays that when he goes to the G7 for sure.
Kathleen, just so that everybody understands, is it two different things? One is the minimum global taxation, and the other one is basically, a digital tax. Everything, I guess, needs to be aligned for it to make a real difference for companies not to find loopholes.
Oh, absolutely, and that kind of underscores, they are two different things, and that kind of underscores the difficulty that the Biden administration, and other officials are facing, as they try to negotiate some sort of global tax scheme, is that all of these pieces have to fall into place at once. And again, as we discussed, the backdrop of this is that Biden is also embroiled in domestic negotiations about his economic plan, and that, is something that also has to kind of fit within that rubric. So it's a really tricky thing right now for U.S. officials to try to comprehend.
Kathleen, thank you so much. Kathleen Hunter, there, our DC editor. Now we'll have plenty more, of course, on the global taxation story throughout the day. Now, scenes of jubilation across Gaza and the West Bank as Israel and Hamas halt an 11-day conflict. Joe Biden says the U.S. will continue its, quote, quiet, relentless diplomacy. Up next, we discuss all of that with our international government executive editor. She's Roz Matheson, and she's coming up shortly. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Israel and Hamas have agreed to an Egyptian-brokered ceasefire, sparking celebrations across Gaza and the West Bank. The 11-day conflict has left more than 200 dead. U.S. President Joe Biden has praised the truce, which came amid growing international pressure to end a barrage of airstrikes from both sides.
I believe the Palestinians and Israelis equally deserve to live safely and securely and to enjoy equal measures of freedom, prosperity, and democracy. My administration will continue our quiet and relentless diplomacy toward that end.
Now, for more, we're joined by Bloomberg's international government executive editor, Ros Matheson. Ros, what are the next steps now that the ceasefire has actually taken effect?
So it's still very new. It only took effect a couple of hours ago, into scenes of jubilation on both sides, celebrations both in Gaza and in Israel. This morning, the question is, how do you now make it stick? Because it's coming out of 11 days of nightly barrages, and does each side have enough incentive for it to stick? Both on the Israeli side, for the Prime Minister, does he feel he's done enough to degrade Hamas's military capability, its infrastructure, its commanders? And does Hamas in turn feel it's got what it sought out of this and perhaps established itself as more of a leading voice for the Palestinian people in the region? So the challenge for the mediators, which is primarily the Egyptians in this case negotiating with both sides, is are there systems in place to support the ceasefire against the many vested interests who perhaps will try and poke a hole in it? Are there mechanisms for communication if you get isolated incidents, perhaps Lebanon sending further rockets into the area or some such, that ensures that the ceasefire holds up against that, because it's still very new and it's still very fragile. That said, there is equally an incentive at this point for both sides to make sure that it does indeed stick.
So, Ros, what's the real risk of fighting actually breaking out again, not shortly, but soon?
Very much so, because Israel and Hamas have already fought 3 inconclusive wars in the past. We've had this most recent conflict, and the longer-running, more complex issues that underpin all of this won't go away just because there's a ceasefire. You've got long-running disputes over territory, homelands, rights to housing, and so on. And you've had, in all of this, very intense communal violence in the mixed quarters of Jerusalem, and getting that to sort of taper off as well is a key question. So a lot of complicated problems still in the mix. And so while tensions may be dialed down temporarily, the question is, will that last? Because there's no framework at the moment for a broader peacekeeping process.
Ros, thanks so much. Rosalind Matheson, there, our executive editor for international governments. Now, we're also looking at what's happening in Lisbon. This is where EU finance ministers are meeting. The German finance minister, Olaf Scholz, speaking right now. I think he's speaking in German. Our Maria today is, of course, standing by, listening to what he says, especially if he breaks out in English. We'll take that live. He's saying that the U.S. 15% tax proposal is a big step forward. Again, he says that it looks like we'll have a tax proposal in the summer. Again, if you think about it, back in April, the U.S. was proposing 21%. Now it's a 15%. So it does look like, even if it's less ambitious, it's more likely to get consensus. Onto the markets, and it's been a wild week for crypto investors. Elon Musk and the PBOC knocked Bitcoin prices by a third. The digital currency staged a recovery. Not even President Biden's proposal that crypto transaction of a certain size will need to be reported to the IRS has halted that. Now, prices have since held around $40,000. Joining us now is Tulan Nguyen, Commerzbank FX Strategist. Tulan, thank you so much, as always, for joining us. We'll get on to inflation expectations, dollar in a second. But what do you do with crypto right now as an FX strategist? Do you do anything?
Well, obviously, we're observing it because it is just the hype on the markets at the moment. But in all honesty, I mean, we look at it as any other speculative object there's out there. We don't see value in cryptocurrencies, at least in their current form, as money, as classical money, or as a means of transaction. So that's why, from a fundamental point of view, we don't put a lot of weight on cryptocurrencies. I mean, that may change. There's a lot of innovation happening in this area. So maybe at some point, the technical issues that we have in many cryptocurrencies will be solved at some point. So that's why I think it's interesting to look at it and observe it. But the volatility that we're seeing at the moment, that really shows you that there are still a lot of issues here with cryptocurrencies.
Tulan, overall, is it something more symptomatic about volatility in asset classes? Is it symptomatic of cheap money out there, or do you just focus on the inflation debate to see what currency pairs you like?
Well, I mean, as for cryptocurrencies, I think one issue here is obviously that they are only limited in their amount, which is obviously for some people that is attractive, for some it's not. So it's more comparable to gold, although even more volatile. And as for other currencies, yes, indeed, we're focusing on the inflation debate, which is driving currencies at the moment, particularly the US dollar, because that is where the focus is on at the moment. This is where the inflation fears are highest because of the combination of ultra-expansionary monetary policy as well as expansionary fiscal monetary policy.
What happens to dollar in all of this? When you look at inflation, when you look at what we're hearing from the Fed or not hearing from the Fed and all the data coming out, is dollar stronger from here, or is there a risk that actually we have a repricing that's pretty imminent?
I think the path for dollar is not exactly clear from this point on. I think we will see quite some volatility here because high inflation per se, you cannot say if it's positive or negative for the dollar or for a currency generally, because it depends. It depends on the central bank, obviously. If we have high inflation for the very dovish central bank, which is something that we have at the moment, that is obviously negative for the dollar. And this is why we are seeing dollar weakness. But this could turn if the market at some point expects the Fed to turn around, it become more hawkish and start to react to high inflation. And then this could turn positive for the US dollar if the market starts to expect higher real interest rates in the US. And this is something that I could imagine could happen in the next couple of months because this is probably going to be this quarter and the next quarter is economically going to be one of the strongest in the US. And this could push a more hawkish view on the market.
Tulan, what do you expect actually from PBOC and what does that mean for renminbi?
Well, the PBOC has been scaling back support for the economy somewhat because obviously the Chinese economy has already retraced the losses from the pandemic much earlier than any other big economy. And what they're now focusing on is the problems that the Chinese economy had before the pandemic. And that is structurally high debt, for example, which requires the PBOC to be more restrictive. And they're starting to rein in credit extension. And I think what we'll be seeing as well is that they might be allowing more bankruptcies in some areas of the economy. And overall, this means that the Chinese economy will be dropping back towards a weakening path. Probably growth over the medium to long term will drop to below levels that we saw before the pandemic. And all of this should weigh on the renminbi over the medium to long term.
Thanks so much, Tulan there, Nguyen, Commerzbank FX Strategist. Now let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Hi, Francine. The number of UK cases of the coronavirus variant from India has more than doubled for a second week. Health officials are also monitoring a new mutation of the virus. It's adding fresh doubt to plans to fully unlock the economy next month. Still, the government is increasingly optimistic about the effectiveness of vaccines. More than 70% of UK adults have now had at least one dose. The European Union is backing the introduction of vaccine certificates to allow quarantine-free travel within the bloc. It's offering the region's battered tourist industry a chance to salvage the summer season. The passes will be issued free of charge in digital or paper forms. They'll offer proof the holder has been vaccinated, has recovered, or has had a recent negative test. The US is exploring how to help chip producers and buyers share supply chain information to alleviate the global supply crunch. Commerce Secretary Gina Raimondo is also urging Congress to swiftly pass legislation to fund domestic production. She convened a summit of the biggest firms affected by the crisis, including executives from Apple, Google, Ford, and General Motors. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg, Francine.
Laura, thanks so much. Now coming up, Europe's road to recovery. EU finance ministers meet today as optimism about the bloc's economic rebound grows. We'll be live in Lisbon next. This is Bloomberg.
Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
Trading revenues coming in better than expected. Everything cash. $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
We are becoming very optimistic. We went from a very strict lockdown in the winter, very tough, intense, but now the vaccination program is working very well. The number of cases is extremely low. We're opening up already most of our economy, and the numbers remain very low.
So stay connected.
And now the tourism is back.
I believe the optimism about the prospects for the euro area are justified.
We are expecting that we can
Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
Close to 5%.
Trading revenues coming in better than expected. Everything cash. $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
2021, leading into a strong start for 2022. And therefore, I do believe it is possible that we will see further revisions in our growth expectations as we move through.
The Irish and Portuguese finance ministers speaking to Bloomberg's Maria today in Lisbon. And in the past few minutes, the German finance minister Olaf Scholz was also speaking to reporters and said that the U.S. global minimum taxation proposal is a step forward. Our Maria today was asking the questions to all of those ministers. She's there. First of all, Maria, what's the mood in Europe right now? What did the French finance minister or the German finance minister actually tell you about this taxation proposal?
Our GDP up to 1 point, close to 5%.
Yes, and you know, Francine, we just spoke to Olaf Scholz, who said this should be a happy day for Europe. We've been pushing for this debate around taxation. This 15% is a huge step forward. We welcome that. And Olaf Scholz, in terms of the timing, he did tell me we're looking at a joint proposal by the summer. So this is a matter of weeks, and a lot of this, of course, driven by the change in the U.S. administration from President Biden. The same comments from Bruno Le Maire, the French finance minister, saying we should avoid that race to the bottom after coronavirus. So this is good that we're talking a minimum corporate taxation, not anything that means undercutting on the taxation
all
front.
of those ministers. She's there. So first of all, they talk about the recovery. Our finance minister is confident that actually the French finance minister is better than expected and to actually tell you about this taxation proposal.
Yes, and you know, Francine, we just spoke to Olaf Scholz, who
I think
said
we've just
this
lost
should
Maria.
be a happy
Maybe
day for
there's a
Europe.
connection
We've
issue,
been
but we
pushing
also
for
want
this
to get back
debate
to Maria to
around
see whether
taxation. This
how the
15% is a
technicalities will
huge
work
step
in terms
forward.
of
We
the
welcome that.
passporting.
And
A
Olaf
shame we
Scholz,
lost
in
Maria,
terms
but
of the
we'll try and get
timing,
her
he
back.
did
And
tell
it's one
me
of the first
we're
times also
looking
that
at
our
a joint
reporters
proposal by the
are
summer. So
actually
this
on
is
the ground.
a
Maria,
matter
if
of
you can
weeks,
hear
and a
me,
lot
I
of
want
this,
to
of
ask
course,
you first
driven
of all
by
about
the
the
change
recovery
in the U.S.
and then also
administration
about vaccines.
from President Biden. The
Yeah, so
same comments
how's the recovery
from
looking?
Bruno Le Maire, the
pretty
French finance
optimistic that they're
minister,
on a
saying
better
we should
path?
avoid that race to the bottom after coronavirus. So it's good yes, that you we're know, talking Francine, a and minimum again, you know, the corporate fact that we're taxation, meeting not here anything that means in person with undercutting some on the technical taxation front. issues, but you know, it's new. We've almost
So,
lost
when
the
they
habit of
talk about
doing
the
this, but it
recovery, our
does show
finance
that
minister is
you
confident
know,
that
Europe is
actually it's
gearing
going
up
to
to
be
reopening on the
better than
vaccination
expected
front.
initially.
Europeans do insist that there will be something like herd immunity by the end of the summer. That's being reflected today, as you see in European stocks and the travel stocks too. And this deal reached yesterday on the
there's a connection
vaccination
issue,
passport
but
could
we
make
also
a
want to
big
get back to
difference.
Maria to see whether or how the technicalities will work in terms of the passporting. I think we've lost a shame we lost Maria, but we'll try and get her back. I mean, we'll get back to Maria because one of the big things also that we've been talking about on the ground. Maria, if you can hear me, I wanted to ask you first of all about the recovery, and then also about vaccines. The EU is trying to find some common rules. Yeah, so how's the recovery looking? Are they pretty optimistic that they're on a better path? Quarantine, or I believe also without testing, but I need to
yes, you know, Francine, and again, you know, the fact that we're meeting here in person with some technical issues, but you know, it's new. We've almost lost the habit of doing this, but it does show that
this is what the markets are looking at
Europe
now.
is gearing
Our
up
Danny
to
Berger,
reopening on the
birthday girl today,
vaccination front.
was
Europeans
going
do
through the markets
insist
and
that there will be
really
something
put
like
the
herd immunity
spotlight
by
on
the end of the
inflation. Once
summer.
again,
That's being
inflation at the
reflected today, as you see
there is a
in
bit more
European
optimism
stocks and
today
the travel
about the
stocks
prospects
too.
for
And this
growth,
deal
getting a
reached
boost from
yesterday
strong
on the
earnings, but
vaccination
also
passport
an
could
economic
make a
reading.
big
I'm looking at
difference.
treasuries, for example, they're slipping. The dollar edging higher. Gold, you know, nothing huge. I think we've lost actually hovering around the highest level in more than 4 months. We'll get back to Bitcoin steady, so it seems like it's a confident day for now. It could move, but again, it is for the moment. Okay, Asian shares were mostly higher, although Chinese shares were actually lower. We'll have plenty more on the markets shortly. Without the base quarantine, or I believe also without testing, but I need to 100% check on that, whether that's indeed the case. This is one of the big things that, of course, will be discussed in Lisbon, where Maria today will be on the ground for us all day. This is what the markets are looking at. Now, our Danny Berger, the birthday girl today, was going through the markets and really put the spotlight on inflation. Once again, inflation at the forefront. There is a bit more optimism today about the prospects for growth, getting a boost from strong earnings, but also an economic reading. I'm looking at treasuries, for example. They're slipping, the dollar edging higher. Gold, you know, nothing huge, actually hovering around the highest level in more than 4 months. Bitcoin steady, so it seems like it's a confident day for now. It could move, but again, it is for the moment. Okay, Asian shares were mostly higher, although Chinese shares were actually lower. We'll have plenty more on the markets shortly. This is Bloomberg.
Generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
I think what we're seeing during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives.
isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solution.
Transport, industry, buildings, electricity, all of those
Well,
things.
Biden's team backs down on tax. The U.S. president proposes a 15% minimum tax on multinational firms, lower than the 21% originally suggested. Ceasefire, Israel and Hamas agree to end an 11-day conflict in the Gaza Strip after the violence claimed more than 200 lives. And the EU backs vaccine certificates to ease cross-border travel this summer. The bloc's finance ministers meet today in Lisbon. Well, good morning, everyone. I'm Francine Lacqua in London. Welcome to Bloomberg Surveillance Early Edition on Friday, the 21st of May. So markets more calm this morning. The U.S. futures gaining, European equities have changed. Let's get a look at which individual stocks are on the move this morning with Danny Berger, our birthday girl. Danny, I'm going to at some point stop saying it, but I'm excited.
It's okay. I'll take all the attention. And, speaking of birthday, in case anyone is looking for a gift for me, it's not just Dogecoin. Richemont happens to be doing well because their jewelry sales are really well. Maybe people are, getting ready to give me some gifts. But anyway, so Richemont had its earnings today. And yes, it was jewelry that really carried it through. Jeffrey's calling the results of that sector impressive, outstanding, and really just bodes well for Richemont for the rest of the year, especially when travel comes back and people are spending more as they're going on holidays. Travis Perkins off a bit of its highs this morning, but it is gaining. It sold its plumbing business to HIG for a little bit more than $460 million.
So markets
Analysts
more
appeal
calm
Hunt
this
saying that
morning.
this allows
The US
Travis Perkins to really focus in on their core business.
Let's get a look at which
Also looking at the
stocks
biggest
are on the
loser
move
today,
this
and that's
morning
Lufthansa.
with
It's been
Danny
hit
Berger,
because
our
its
birthday
biggest
girl. Danny, I'm
private
at some
holder,
point stop
that's
saying it,
KB
but I'm
Holdings,
excited.
they own about 12% I'll take all the of attention. Lufthansa. And, speaking of birthdays, in case anyone is looking for a gift for me, it's not just Dogecoin. Their holdings happen to be doing well because their jewelry sales in turn is sending the airline down by more than 6%. But anyway, so Richemont had its earnings today. And yes, it was jewelry that really carried it through. Jeffrey's calling the results of that sector impressive, outstanding. It really just bodes well for Richemont for the rest of the year, especially when travel comes back and people are spending more as they're going on holidays. Travis Perkins off a bit of its highs this morning, but it is gaining. It sold its plumbing business to HIG for a little bit more than $460 million. Analysts appeal Hunt saying that this allows Travis Perkins to really focus in on their core business. Also looking at the biggest loser today, and that's Lufthansa. It's been hit because its biggest private holder, that's KB Holdings, they own about 12% of Lufthansa, or rather I should say they did hold 12%. They sold about half of their holdings at a pretty steep discount, so that in turn is sending the airline down by more than 6%.
I love having you on, especially on wild weeks when we talk about crypto, because you understand that crossroads between central banks, Van Cleef, maybe
I don't discriminate.
And crypto. Where does it come?
I'm not fussy.
When does it come? Danny Berger there with the very latest on the markets. Now, the dusty world of
Francine,
central
thanks
banks
for having me on.
a far cry
Look, I think it's a really tough question, and I'm sure every central banker is thinking this week, what does this mean for me? So 9 out of 10 central banks are already doing pilots or studies. As we saw yesterday, the Fed is going to be adding to that and doing their own study. But where will they go? And I think the challenge then is, change normally in central banking happens in small markets first, which allows the larger markets to learn. So actually there's a lot of focus on the Bahamas, Cambodia, St. Kitts, all fantastic places to go on holiday to
as always,
visit.
thank you so much for coming on.
But I don't think it's the
I love
retail
having you on,
side,
especially on
which is where
wild
it's really at.
weeks when we
I
talk about
think
crypto,
for
because you
central
understand
banks,
that
they're
crossroad
really
between what
cautious
central banks
about opening
have been
up
trying to
their
do in the
vaults
digital currency
to
space
a much
and
wider
crypto.
range of
Where does it
businesses
come,
or financials.
when does it
so
come
the work they're really doing is around wholesale markets. Well, and I was really thanks for struck having me that on. when the Bank of I think it's a really announced tough to the question, Treasury and I'm that sure it's every setting up a central bank digital currency task force. What was not noticed was they were also saying we're going to open up are already doing pilot studies to yesterday the Fed is going to be adding to that. And I think it's in the wholesale markets. We're going to see most of the action. Whereas retail, I think the challenge is going to take longer. And Francine, coming back to you, I think the really big central banking challenge for the crypto community is this, which allows the larger markets to take another 5 to 10 years on the Bahamas, Cambodia, St. Kitts, all fantastic places to go on holiday to digital currencies. But I don't think it's the retail side, which is where it's really at. A long runway for the private banks to make the running. They're really I think that's what allowed payment firms, their stablecoin providers, to a much wider range of businesses or financials. So the work they're really doing is around wholesale markets. And I was really struck that when the Bank of England announced with the Treasury that it's setting up a central bank. Yes, so Francine, so there's two blocks. What was not in the wholesale market, they were also saying they were going to open up the Bank of England systems, which a wholesale Singapore sovereign wealth fund are doing, and that's about we're going to see most of the action bank money. Whereas retail, I think it's going to take longer. And Francine, another one. I think the really big interesting challenge for the crypto community is this: an omnibus account, if it's going to take another 5 to 10 years. And I think that, for me, that's decide on what they're doing about digital currency, which could even be here by next Christmas. Even so, I think saying it won't be until 2026. Really focused that leaves a long in the retail area for the private sector to make the running. One of your trips, I think that's definitely go to payment firms, Bahamas, on a stable fact-finding mission on retail central bank currencies.
So first of all, are there any
prime research material?
Absolutely,
and maybe stay for 2 or 3 months.
When you look at what happened to the digital yuan, so there was
something,
Francine,
so there's two blocks. In the wholesale markets, there's two. There's one in Singapore. There's a syndicate called Patria,
how do you see PBOC? Is it a way also for
PBOC,
and this is what,
for
example, Neil Ferguson was saying, is it a way digital yuan to actually also really rival the dollar?
And another one in the UK, which is this opening up. Yeah, well, I think this is a really interesting thing. Live so I think where Neil's got right, this I think that for me that's incredibly digital currency, and which could even be here by next Christmas. And so I think these are the central bank there really trying to in the retail area as much. I mean, we should Francine, for one of your trips, you should definitely go to there isn't a layer for international fact-finding mission on how retail central bank currency is. Where could that go next?
Prime research material, absolutely. And maybe stay for 2 or 3 months. When you look at what happened to the digital yuan, so there was something on it about 10 days ago, and it didn't quite have the oomph that they were expecting.
The choice of
how do you see PBOC? Is it a way also for PBOC? And this is what, for example, Neil Ferguson was saying.
I still think again that's going to be a long-term running. But making cross-border transactions more efficient and more effective. Yeah, well, I think this is a really interesting thing. So I think where Neil's got right, this pilot is incredible in terms of its scale and in terms of the reach. And obviously, I think the central bank there is really trying to digitize as much of the domestic transactions. And at this stage, there isn't a layer for international transactions. Well, look, so first, of course, when Neil's thinking is where could that go next? And I think in the States, still suspect that digitizing a domestic market, I think that there will continue to be focused on this. I mean, is a really long-term project. I mean, I'm not as worried that this week alone in currency, it's not great. I mean, going back to where Daniel was discussing reserve currency, mail order fashion, or equally 40% dominant clothes return. Who would decide when you paid the Bitcoin again? That's going to be a long or when it came out. But making cross-border transactions, it's not really more efficient and more effective. But obviously, if it's an asset, is where pretty much every central bank is focused. The regulators will want to make sure they get paid taxes and capital gains on it. And equally, if it is being used for payments, folk want to know that if it's more than $10,000, just like with banks, that money is followed. So I think it is going to be increasingly brought within the regulatory fold. But that doesn't mean there isn't an opportunity for technology. Where I think the interesting point is, particularly with stable coins, we can tokenize money, be focused on it in a very efficient, not secure way. We've seen the 25% technology piece this week is interesting. It's not great. I mean, going back to what Daniel was discussing, today or mail order fashion, 40% of all clothes are returned. Who would decide when you paid Bitcoin when you first purchased it or when it came out? So as a use for payments, it's not really there. But obviously, if it's an asset, then naturally the regulators will want to make sure they get paid taxes and capital gains on it. And equally, if it is being used for payments, but folk want to know that if it's more than $10,000, just like with banks, that money is followed. So I think it is going to be increasingly brought within the regulatory fold. But that doesn't mean there isn't an opportunity for technology. Where I think the interesting point is, particularly with stable coins, we can tokenize money and send it in a very efficient and secure way. And I think it's that technology piece which is interesting, independent of what the price of Bitcoin may be yesterday, today, or tomorrow.
Thanks so much, Hugh. Hugh Vancinas there, UBS. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg First Word News, or actually Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. Morgan Stanley's chief executive has unveiled his biggest leadership change in over a decade, with a slate of potential successors that mostly resemble the old guard. Just days after JP Morgan pushed two women toward the front of the field to succeed Jamie Dimon, Morgan Stanley's top picks are all white and male. The bank says it's committed to developing and promoting diverse talent at all levels. Ford is considering divesting its Spin e-scooter sharing service. Bloomberg understands the US carmaker is examining options, including a sale or spin-off of the business, which it acquired in 2018. The company operates dockless electric scooters on campuses and cities in North America and Europe. Lufthansa's largest private shareholder sold more than half its stake in the airline. The Thiel family disposed of 33 million shares just 3 months after the death of the family's billionaire patriarch. He'd built up a stake of about 12% in the carrier. The family remains the largest private owner and second overall after the German government. And that's the Bloomberg Business Flash. Francine.
Thank you so much, Laura. Now, Oxford Cannabinoid Technologies, known as OCT, is a London-based pharmaceutical company which develops cannabinoid-based prescription medicine. Now, it counts tobacco giant Imperial Brands and rapper Snoop Dogg amongst its investors and is set to start trading on the London Stock Exchange today. The firm has raised $23 million from wealthy individuals and institutional investors. A number of medical marijuana companies have listed in the UK this year, but OCT is looking to set itself apart from the others by stressing its pharmaceuticals roots. Well, joining us now is Neil Mahapatra. He's Oxford Cannabinoid Technologies Executive Chairman and co-founder. Neil, thank you so much for joining us, and congratulations. I know it's a big day for you and the company. Why did you decide to list here in London?
Well, thank you very much for the opportunity to speak. And we chose London because we're a British company, and I think London is now open for cannabis companies, but our DNA being both based in London and Oxford is very British. So the London Stock Exchange main market seemed the right place to do it, and we're incredibly fortunate to have raised £16.5 million.
And I know, Neil, you're very focused, of course, on the pharmaceutical aspect to this. And I know in the past you've tried to say that you wanted to replicate also the success of GW Pharma. How do you see that path going?
Well, yes. I mean, yes, of course we're a cannabis firm. We're a medical cannabis firm, and we work with cannabis and cannabinoids. But we do that through the pharmaceutical development channels that have been around for decades, of phase 1, phase 2, and phase 3 clinical trials. And that's the way we feel that you really get the confidence of the medical community behind you to prescribe cannabinoid-based medication, which has huge potential. There's massive potential in the plant, but they only prescribe it with confidence if you go through these existing channels. And GW is the really our key comparable. They've done that for many, many years now, and they were bought for $7.5 billion, or just over $7 billion a few months ago. And so that's the type of success that we're looking to emulate, and it's by pursuing cannabis development through pharmaceutical channels that we think you really do get success in the cannabis market.
So do you expect to see more medical marijuana listings in London?
I expect so. I think London has been incredibly forward-thinking and now opening up the right type of professionally run medical cannabis firms. And it's good news for the market. We're a center of finance of the world, and it just seems only natural to now open up the London Stock Exchange for cannabis companies.
I mean, could it actually become, a couple of years ago, it was all about Toronto or Canada for some of these listings. Do you think that the UK could become that pocket now?
I hope so. I think the London Stock Exchange has, it's one of the oldest exchanges in the world, but it's also one of the most forward-thinking. And now that cannabis is going global, and it's not just about North American companies, it's about UK companies such as us, and about European and Asian companies. I think London is poised to be a real potential hub for cannabis listings, medical cannabis listings going forward.
Give me a sense of what you think, Neil, would have to change for some of this, cannabis-derived medication to become more mainstream.
I think the key is to get to generate data. It's to get the confidence of the medical community that this plant, this amazing plant that has so many different cannabinoids, both major and minor, in it to get the confidence that there's huge medical potential there. And the way to do that is to generate classic pharmaceutical data, randomized controlled trials, and work with the cannabis plant, as we do at OCT, but taking them through these pharma channels of development to really build that confidence up in the medical community. Once you've got that confidence amongst doctors, then I think we're very much on the way to mainstream acceptance of the medical power of cannabis and cannabinoids, which has the potential to be absolutely huge, as GW's multi-billion acquisition shows.
How big do you think it can be? So, if you give me a sense of size and scope, how big is it now, and how big will it be in 5 years and then 10 years?
Well, so I think if you look at just what we're looking to do, which is take cannabis-based medications addressing the pain markets, given the opioid crisis and the backdrop that has. That alone is a 40 billion pound and over 40 billion pound pain market. And so, but cannabis and cannabinoids have the potential to work not just in pain. GW focuses a lot on neurological conditions. Jazz Pharma focuses on neurological conditions. There's a huge amount of other indications in the pharma industry that cannabis can really address and really have a massive benefit for people across the world. So it has the opportunity to be multi-hundred billions, this market. And then hopefully we will be one of the companies that can kind of capture some of that share.
Neil, when you look at, I guess, some of the barriers to entry, again, I mean, what makes a successful company in this space and others, won't be so successful? What will differentiate OCT compared to the others?
I think it's about quality of management team and support of institutional shareholders. So our team is incredibly professional, led by a seasoned pharma exec with 2 decades of pharma experience. And the rest of the team around him are very, very high quality from previously working in mainstream industries. I think both with FTSE 100 Imperial brands in our shareholder base, it's ensured that we've had to do everything to not just above board standards, but to those high FTSE 100 standards of reporting and compliance. And I think the cannabis market is such that there's a massive tailwind to it, and it's a bit of an open door. But how you differentiate yourself versus other cannabis companies is through quality of management team. And I really believe that. And I think we're well positioned in that regard.
How helpful is it actually to be backed by, a name like Snoop Dogg, because it grabs people's attention?
So I've never met Snoop Dogg, but we have been incredibly supported by his investment firm, Casa Verde Capital, that invests in cannabis companies all over the world. And they've been so helpful. The managing partner, Karen Wadera, and the other partner, Yoni Meyer, have been incredibly supportive since their investment in 2018. And so from that perspective, brilliantly helpful. We've had access to their network, to their expertise, to their board guidance, and it's been a massive benefit to us.
Thank you so much, Neil Mahapatra, there, Oxford Cannabinoid Technologies Executive Chairman and Co-founder. I hope I'm saying it correctly. Is it cannabinoid? Or
Cannabinoid. You're saying it absolutely correctly. Absolutely.
All right. As it's getting more mainstream, we have to get the pronunciation on the right side. Neil, thank you so much for joining us today. Now, Credit Suisse considers retention bonuses to stem the flight of talent. Morgan Stanley presents an all-male cast to succeed Chief Executive James Gorman. Up next, we discuss the talent pipeline at the world's biggest banks. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it.
Guess what?
Now,
Also,
you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Morgan Stanley Chief Executive James Gorman shakes up the bank's leadership by positioning a group of 4 men as his most likely successors. Ted Pick and Andy Saperstein emerge as co-presidents and likeliest people to take over as chief executive. Now, James Gorman has told the board that the plans to remain chief executive for at least 3 more years. But the all-male, all-white executive shake-up at Morgan Stanley may look all too familiar to some. Well, Bloomberg Opinion's Elisa Martinuzzi has written a piece entitled Morgan Stanley Didn't Get the Diversity Member, and you can read it in full on OPIN Go. I've also pushed it out on social media, and we're joined by Elisa. Elisa, it's a great piece, and it's actually funny and tragic at the same time, but what does it actually say about the bank's talent pipeline?
Well, I think this is the point that I'm trying to make is, clearly the lineup for this next round is what it is, right? I mean, there are, at the moment, there are only 4 white men that are, in a position with the credibility and the experience under their belt to be taking on that position. But what I've really tried to sort of look at is, the future pipeline. And that's where I think there are questions to answer, because it doesn't seem like there's much really changing in the future generations. So if you look at the operating committee, which is the highest body of management at Morgan Stanley, well, that committee is still dominated very much by white men. And even the next level of management, you have, more than 60% of the individuals on that committee are white men. So I think there is clearly, it is what it is where they are today, but, the pressure to look to do more in terms of bringing up a diverse leadership will intensify in the years to come while James Gorman remains in his position.
Elisa, I mean, I have a number of stories to ask you about, but Credit Suisse is also considering retention bonuses. I mean, they're struggling for a number of reasons, including, I guess, Archegos and reputational damage, but will it be enough to retain key talent?
Well, that's a difficult one. Clearly, there has been quite an extensive exodus already, right across the globe, in the US and in Australia, and this is often what happens is that the companies will respond and try to stem the outflow. There is a new chairman. He's just started a few weeks back, who will be setting a different tone for the organization, and it'll really be quite key for him to send the right message to the staff he wants to keep, that they will be looked after, they will have the opportunity to excel. I mean, the big question really is, if you have a business that is likely to be reining in risk and going through, an introspection to find out, what works and what doesn't work, the concern is that individuals will feel that they're not going to have the opportunity to shine for a long time to come.
Elisa, thank you so much. As always, Bloomberg Opinion's Elisa Martinuzzi. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of Berlin. Kayleigh Lyons is in New York. We'll, of course, look at the markets. We'll have other stories as well. We'll look at the conflict in Gaza. We'll look at whether the truce will hold. The other big stories, of course, is global taxation stories. So our very own Maria Tadeo is in Lisbon, where EU finance ministers are meeting. The U.S. late last night actually floating this 15% corporate tax idea. That's less than the 21% rate it had proposed for the overseas earnings of U.S. businesses, but it could be a way of actually getting consensus and rallying the troops. So we'll have plenty more on that. This is Bloomberg.
closures and the complexities of COVID, it became apparent that if we could provide this course in South Australia, it would benefit trainees of anaesthesia in the state.
Feel like I've got some excellent skills to take away from the course, and I'm very grateful that it could be run in Adelaide.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Good morning from London, Berlin, and New York on this Friday, May 21st. Our top stories today. Biden's bold tax bid, well, he's calling for a global minimum corporate tax of just 15%. That's less than what he wants American companies to pay on their overseas earnings. The fighting stops for now as ceasefire ends the 11-day conflict between Israel and Hamas militants, but the truce doesn't address the root causes of the violence. And the European Union tries to save summer. Negotiators have agreed on vaccine certificates that could boost holiday travel. Now, our top three stories, Kaylee, I know there will be a lot of focus on whether especially Americans can actually travel here to Europe and then travel around the countries. Different, of course, if you are in the UK because they're no longer part of the European Union. On the markets, it's all about inflation, but it looks like it's quite a positive day.
Yeah, I'll try really hard to focus on the markets, Francine, but really I'm thinking about Ireland because I'm supposed to fly into Belfast, Northern Ireland, Brexit and vaccine passports, really complicating the situation for me. But as far as the markets goes, it was a bit of a mixed session in Asia. We did have Japanese stocks higher, but Chinese stocks underperformed. They were down about 1%. And Taiwan stocks were Hong Kong stocks were under a little bit of pressure as well. The big drag within the Hang Seng was Tencent. It reported results overnight. Solid first quarter, but the company said it's planning to invest more, and that could weigh on profit going forward. So those shares were down about 3.4%. In foreign exchange, I would note the Aussie dollar is the big underperformer in the G10 space, weaker against the US dollar by about 0.3%. And that has everything to do with the continued declines we are seeing in commodities. Take iron ore, for example. Futures in Singapore down 4.5%. Second consecutive weekly loss, which is the first time that's happened in about 2 months. A lot of concern about China cracking down on that rally. As for what the picture looks like here in the U.S., big tech did lead some pretty solid gains for U.S. equities yesterday, and we're seeing just a touch of continued buying this morning. S&P 500 futures up about 8 points. In the Treasury market, we saw yields creeping down yesterday. We are unchanged at that 1.62% level, and I wanted to point out gold as well because it is snapping a 6-day winning streak. Futures down about 0.2% to $1,880 or so an ounce. And then, of course, there's an asset that some people say may be competing with gold, a digital gold. Bitcoin has seen a very difficult week, down about 9% over the last 5 days. This morning, though, some stabilization right around that $40,000 level. But man, what a week, Matt.
Yeah, it was insane. By the way, Kaylee, I'm thinking a lot about Ireland today, too. But not because I'm going there. I think it's fascinating that the Biden administration wants to raise the global minimum tax above what Ireland charges Apple and Microsoft. And it's not like they don't know what they're doing, right? Shouldn't they have some autonomy in their tax policy? In terms of their stock market right now, they're up. Take a look at this map. You can see we're showing gains mostly across Europe. The UK right now down, but everything else is rising. If you look at The dollar, as you showed us, it's rising. So we're seeing a drop in the euro. We're seeing a drop in the pound. The German 10-year is getting now further away from zero, as it had been approaching the positive rate over the past couple of days. Didn't quite get there. And then Lufthansa, I think, really interesting today, as Lufthansa's biggest private owner sells half of its stake. Heinz-Hermann Thiele's family or the estate sold 33 million shares at €9.80 a piece. And as you can see, the shares are down big, Fran.
Yeah, breaking news. You and I, Matt, will actually have, a heated discussion probably on taxes. I can't wait for it. We can't do it right now, but it will be, it'll happen shortly.
I'm excited.
Let's first of all look at what's ahead today. Euro area finance ministers and central bank chiefs are meeting today in Lisbon. Then later at 9:45 a.m. New York time, we will have the U.S. manufacturing and services PMIs. Apple chief executive Tim Cook testifies today in a trial with Epic Games. And finally, President Joe Biden will meet his South Korean counterpart, President Moon Jae-in, at the White House today. Matt, on taxes, so I mean, a couple of things. First of all, yesterday the proposal from Treasury of a corporation tax of 15% is far below what we had heard in April, which was 21%. So you could argue, look, 15%, you rally the troops and it gets it behind. But what you don't want is exactly, countries to lowball so that they attract business without paying proper taxes, which is why you have to have a uniform global level.
But why? Who gets to decide what proper taxes are? Why can't Ireland say, we think 12% is a proper rate? And I mean, I'm not even clear on why corporations have to pay taxes in the first place. The owners pay taxes on dividends and capital gains. The workers pay taxes on their income, on their wage income. Why does another shell of tax have to be added to it? And why does the U.S. get to decide what it is for the world?
Well, I mean, first of all, I think, but we'll get into it a lot deeper, is that if you don't have a minimum corporate level, then it's a race to the bottom. And it's, it's like trade wars, it's like currency wars. As soon as there's a trade to the bottom, a lot of people lose out. But the idea is that they all agree together, right? So you find consensus, and that's the only way to do it, which is why they've tried to do it for a decade, and it's been so difficult at the OECD level. So let's get more on the global tax proposal from Bloomberg's U.S. political editor, our Kathleen Hunter. Kathleen, first of all, 15% instead of 21%. Is that just to try and get everyone on side?
I think it's a recognition that 21% was overshooting the mark. I mean, I think there's a real sense that, the Biden administration is signaling, and we've seen that in how this has been received from different finance ministers across Europe, especially, that, this is an effort to try to get a deal on something and try to negotiate rather than shooting too high at the beginning. And I think that's what the Biden administration is really signaling here.
Let's talk about something else from international affairs, Kathleen. A lot of international efforts have been focused on the ceasefire between Israel and Hamas. We, of course, heard from President Biden after that Egyptian brokered truce was announced. Take a listen.
In my conversation with President Netanyahu, I commended him for the decision to bring the current hostilities to a close within less than 11 days. I also emphasized what I've said throughout this conflict. The United States fully supports Israel's right to defend itself against indiscriminate rocket attacks from Hamas and other Gaza-based terrorist groups that have taken the lives of innocent civilians in Israel.
So, Kathleen, the ceasefire may put an end to the violence for now, but it doesn't get to the root cause of the conflict. Will the Biden administration take a more active role in preventing that kind of violence going forward?
Well, I think that it's important to remember that even during the last 11 days, while this conflict was going on, what we heard really primarily from the Biden administration was a desire to emphasize that they are working in, sort of what they've described as quiet diplomacy behind the scenes. And so I think that, that's what we should expect to continue. Obviously, Biden is under pressure domestically from his left flank. The progressives in the U.S. want to see potentially a harder line against Israel. So I would imagine that going forward, there will be U.S. efforts, but that they're going to be a little bit below the radar.
All right, Kathleen, thanks so much for joining us. Kathleen Hunter, our U.S. politics editor, on a couple of the really biggest stories that we're following today. Another one, as Francine and Kaylee were talking about at the top, tourism in Europe is getting a chance to salvage this summer. EU negotiators have agreed on vaccine certificates that will allow quarantine-free travel within the bloc. Bloomberg's Maria Tadeo joins us from Lisbon on vaccine passports. So how are they going to work, Maria?
Well, Matt, you know, the idea is that you can download on your phone an app, and with that you could show that you've been vaccinated, that you've already had coronavirus, or that you have tested negative, and that should mean that you could enter the European Union, and in particular, I'm sure the Southern European countries ahead of the summer, and do it in a way that's quick. Now, the thinking for this is that last year the rules were so difficult and so complicated that no one was able to book a holiday. If you do it this way, it's the same rules for everyone, you streamline the process, and that could mean that tourism could pick up this year. At least that is the goal, and it's something the finance ministers are now debating here in Lisbon, meeting for the first time, by the way, since September. I do want to say, Matt, and just alluding to your previous conversation, the other big topic here is that minimum corporate tax proposal put forward by President Biden. And I have to say, I spoke to the German finance minister, Olaf Scholz, and he told me this is great news. This is a good day for Europe. And he said this is the best chance we've ever had to get a comprehensive tax deal on this. We're talking about a proposal that could come in the next few weeks.
All right, Bloomberg's Maria Tadeo in Lisbon covering that Eurogroup meeting for us all day long. Thank you so much. I do want to take a look at some stocks moving in pre-market trading here in the U.S. Now, Maria was just talking about the travel rules in the EU, and we are seeing a number of U.S.-oriented travel companies moving higher in pre-market trading, one of them being United Airlines, up about 0.75%. Not necessarily air travel, but maybe space travel. Another stock moving to the upside is space, the ticker Virgin Galactic, which of course is Richard Branson's space exploration company. It confirmed yesterday it will have a test flight tomorrow. That saw the stock up 14% in the Thursday session. It's higher by another 6% this morning, and an upgrade from UBS may be adding to that positive sentiment. Speaking of positive sentiment, Oatly saw a very warm welcome to the public markets yesterday, rallied 18% in its trading debut. It's up another 12% in early hours, Francine, and I think we have to give Matt Miller a bit of a homework assignment to go out and try some oat milk over the weekend, Francine.
And look at tax regimes.
And
Matt, I have to say, no, just very quickly, Matt, the thing you said about, why do corporations pay taxes? Why do corporations pay taxes? I mean, the idea is that if governments don't have a treasure trove, then they can't actually address inequality or climate change. So there is a kind of, in the Western world and everywhere, an assumption that government, whether it's big government or smaller government, just needs a bit of money to make society a little bit fairer.
So you're just saying they want to add on another layer of taxes, and that's a good place to do it?
Well, in some, actually, it could actually go down, right? But the idea is that everyone's equal. We'll have plenty more debate coming up this hour.
But people already pay taxes on that money. You already pay taxes on those profits. You already pay taxes on those wages. Why
but not on revenue.
Add another layer?
But that's what's happening at the moment. Corporation tax. I mean, we'll get into it, and we'll look also at some of the big tech and how much they're paying compared to some of the older school companies. Coming up, Maya Bandari, Columbia Threadneedle multi-asset portfolio manager. And then a little bit later, we'll also speak to the IMF managing director, Kristalina Georgieva. That's at 12 p.m. in New York, 5 p.m. in London. And this is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller here in Berlin with Francine Lacroix in London and Kaylee Lines in New York. I'm the only capitalist on this show. I think that could be.
No, there's capitalism, and then there's like extreme capitalism, and then there's like no safety line for anyone in the world.
Oh, okay. So it's about safety nets. Got it. What I want to talk about is inflation first and foremost, because we saw the Philly Fed inflation index rise to a 40-year high. I've got a chart showing that here that I believe my producer Daniel Curtis threw together for us. You can see that there are two white lines, and if you're listening on radio, you can't see that. There are two lines, sorry, one white, which is current inflation, and one blue, which is expected inflation in 6 months. And the interesting thing, this is where those of you on radio are at a slight disadvantage, is that the blue line comes down slightly at the end. So the expectations for prices 6 months out are actually easing a little bit, and this could play into that transitory argument that the Fed has been making. Nonetheless, the prices that we're looking at now, at least according to the Philly Fed survey, Fran, are at a 40-year high.
40-year high. Let's get straight to Maya Bandari, a multi-asset portfolio manager at Columbia Threadneedle, to look at some of the price surveys. And Maya, overall, it just goes back to whether we see rampant inflation or not.
Good morning. Yes, I mean, as Matt just pointed out, it really is expectations, I think, that matter. I mean, in the short term, inflation, as we've already seen, has picked up quite meaningfully. And, our expectation is that inflation will be both higher and increasingly volatile over the course of this year, both in the U.S., but also, frankly, in Europe, as things like the German VAT cut rolls off. And I guess furthermore, in the shorter term, the inability of supply to keep up with demand, whether we look at semis or more broadly as huge domestic savings are spent, will be a challenge for inflation readings. But our view is that inflation rises will be transitory. I realize that's quite a consensus view, but that is the view that we have, and that the Fed will look through rises in inflation in keeping with its own flexible inflation targeting. But I think those longer-term expectations will be really key to watch, because that will be worrying if they start picking up.
Yeah, they certainly will. Maya, where do you see the biggest value? I know you're looking at Japanese equities and U.S. equities.
Well, in equity markets, we like Japanese markets, we like Asian markets, we like the U.S. Market. I guess Asia and Japan more broadly have been a bit softer than we might have expected. Participated less in some of that equity market strength, given they're very cyclical equity indices that we would expect it to really benefit from some of the strength we're seeing across the world. To our minds, those are the reasons for its underperformance, if you will, have been very specific and idiosyncratic. In Japan, for example, a state of emergency and some domestic flows. But broadly, we see the earnings season has been really quite strong across all three of those areas. I mean, now in the U.S., for example, the strength has been really pretty astonishing. I mean, earnings have grown by more than twice the punchy 25% that was expected at 50% year on year. Unusually, analysts are marking up their forecasts as the quarter progressed rather than marking forecasts down.
Right.
And I guess, as in the last quarter, the markets have used this reporting season more broadly as an opportunity to post modest total return gains, but also to de-rate. And I guess that's sort of in keeping with what we've seen in recent seasons too.
We're seeing much lower valuations in terms of much lower valuations in terms of UK stocks especially, but also Asia Pacific and European stocks compared to the S&P 500. And we've heard a lot of people rotating into, say, European cyclicals. Do you think that's the right play?
Well, I mean, I think European cyclicals have certainly done very well. As I just reflected, I think from our perspective, we are sort of targeting, if you will, our cyclical exposure at Columbia Threadneedle asset allocation at areas like Asia and Japan, where, not only do we have really good earnings expected to come through this year and next year, but don't forget we had really punchy positive earnings growth delivered last year too. So if you look at the price of, if you look at the PE you're paying for sort of the compounded earnings growth that you're getting, Asia and Japan, to our minds, are stronger investment cases right now.
Maya, we've heard from a growing chorus of strategists that we're peaking now, that the second quarter is the best it's going to get, and therefore it might be time to start pulling back on risk. Is that narrative wrong?
Well, I think that's certainly the right narrative in terms of economic growth. I think, most folk, including us, expect economic growth to peak in the current quarter. But, of course, as we know, economies aren't markets. And I think for financial markets, and when we look at the earnings trajectory, as I reflected a moment ago, the expectations have actually been rising, so not pointing to the peak in the current quarter, but actually sort of an acceleration through the year. So if we look at the year as a whole for the U.S., for example, the analyst community is expecting, I think, something like 33% earnings growth, and at Columbia Threadneedle, we would perhaps point to some upside risk to that forecast. So no, I guess it's a short answer. We don't think we're at sort of peak earnings momentum here.
All right, very interesting stuff. Maya, thanks so much for joining us. Maya Bhandari there, multi-asset portfolio manager at Columbia Threadneedle, says we're not at peak earnings yet. Coming up, it's our final day of the Bloomberg Business Week conference. We're going to speak with the Glossier founder, Emily Weiss, AB InBev CEO, Carlos Brito, Villa One Tequila co-founder, Nick Jonas. That's all starting at 10 a.m. in New York, 3 p.m. in London. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Well, this is Bloomberg Surveillance, the early edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now let's get straight to the Bloomberg First Word News. And the Biden administration is looking at ways to alleviate the global shortage of semiconductors. The Commerce Secretary Gina Raimondo convened a meeting of executives from companies affected by the shortage: chip makers, automakers, and tech giants. Producers and buyers could end up sharing supply chain information. Now, the Federal Reserve is now looking into a digital dollar. The chairman, Jay Powell, says a central bank will publish a research paper and seek public comment on digital currencies. The focus will be on how a digital dollar could improve an already safe system. China's already moving ahead with a digital yuan. And Credit Suisse, more fallout from the collapse of hedge fund Archegos Capital. Senior banker Tim McTharrar is leaving the Swiss lender and is going to rival UBS. He'll run the telecom, media, and tech advisory team in Sydney. There's been an exit of talent from Credit Suisse in the wake of debacles involving Archegos and Greensill Capital. And more than 25 years later, well, the BBC has apologized for a tell-all interview by the late Princess Diana. An inquiry concluded that the BBC reporter Martin Bashir deceived Diana's brother to obtain the interview. The probe faulted BBC management for covering up Bashir's conduct. That included creating fake bank statements. And I have to say, yesterday, for only the first time in almost, as far as I can remember, we had a public statement by Prince William saying that, the BBC didn't do enough to protect his mother, and that then soured relationships with the royal family. That was a pretty scathing attack. And again, from royals that usually are pretty tight-lipped.
Yeah, it is. It seems like the allegations are pretty awful, and if that's true that Martin Bashir did that, I don't know what the involvement of the BBC was, but it just is not nice. And having, people in my family who are pretty obsessive about the royals and Princess Diana, she had a really rough time of it from the documentaries that I've seen, and this just adds to all the problems she had to deal with.
Yeah, we'll have plenty more, of course, on that. We'll also look at the global economy with Dennis Snauer, president of Global Solutions Initiative. This is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance, the early edition. I'm Francine Lachman, London, Matt Miller in Berlin, Katie Lyons in New York. Now, there's quite a lot going on in the markets, Matt. A little bit of an easier day in terms of market volatility. The focus still on inflation expectations.
Yeah, inflation expectations. And, you know, tied to that, Francine, is this labor crunch that we're witnessing in the U.S. and we're expecting to be maybe even worse in Europe amidst the reopening. There just aren't enough people to fill the job openings in the U.S. Maybe they're not coming in because of extended unemployment benefits. Maybe there are other reasons, for example, concerns that there aren't the kind of skilled workers that are needed for the new economy jobs that are being offered. But in any case, it could be worse in Europe than it is in the U.S. because, of course, the unemployment benefits in the U.S. are set to end at some point, whereas here in Europe, they're much longer and more generous.
Yeah, of course, that would lead to inflation because you have to pay people more to get them back in the workforce. Kaylee, how's it playing out in the markets?
Well, it's a relatively quiet day in the markets, Francine. One thing I would add to what Matt just said is we are seeing several Republican states now scrapping that extra $300 a week in unemployment benefits for that exact reason, the labor shortage. It's being blamed as contributing to that. As far as the markets go, it is a positive day, but the moves are relatively muted. We're up just about 0.25% on the stock 600 in Europe, while futures are pointing to a firmer open here in the U.S. We're up about 8 points on S&P E-minis. In the Treasury market, we saw yields moving lower yesterday. We are now unchanged at that level. 1.62% on the 10-year. And then Bitcoin is creeping higher just off of that 40,000 level. Still, though, we are down about 8% on the week. Of course, the fact that Bitcoin is stabilizing a bit this morning is aiding some cryptocurrency-tied stocks in pre-market trading, Marathon Digital being one of them. It's up about 2.4%. And then Tesla, as we know, closely tied to this story as well. It rebounded about 4% yesterday after a few days of steep decline, and that rebound continues this morning, up about 2% in early hours. And then I'm just going to talk about some more auto stocks, Matt, just because I know they're near and dear to your heart. Ford is another outperformer in early hours, up 1.5%. To the downside, though, Lordstown Motors, of course, an EV maker, it fell more than 15% yesterday after an analyst over at Wolfe Research slapped a $1 price target on the stock. This morning, it's down another 6% in early hours, trading around $9 a share, Matt.
Yeah, a would-be EV maker, right? Because they don't actually have an electric truck out, whereas Ford yesterday showed its F-150 Lightning, and I'm very excited about that, so I appreciate you bringing it up. I wanted to just point out a chart that I was teasing on radio earlier. I was trying to get radio listeners to switch over to television to see this chart, because what it shows you, Francine, is major central banks' balance sheets. And what we can see from this is that the European Central Bank, as you well know, is still expanding its balance sheet. The Fed also to some extent, but not the same extent, whereas the Bank of Japan and the Chinese Central Bank balance sheet are turning over now. So this may give a little bit more ammunition to growth and to inflation that Christine Lagarde so badly wants to generate.
Now, Matt, today's big take story focuses on the rise of mega firms. Gone are the days when IBM and ExxonMobil topped the list of the world's biggest companies. Now, tech titans and Chinese firms are dominating. These companies are bigger than ever, and they're challenging policymakers who may want to rein in their power.
The world's biggest companies are cashed up and thriving. Last year, the top 50 raked in nearly $800 billion in profits. That's equivalent to almost 1% of global GDP. Let's break down the trends. 30 years ago, there were no Chinese firms in that group. Now there are 8, and tech titans are on the rise, from 3 companies then to 21 now. Mega firms are changing the look of the economy. They're hiring fewer workers, more likely to add capacity in the cloud than build a new factory, When they do invest, they often have enough cash without having to borrow. And they're paying less tax, too. The median rate for the world's biggest companies has dropped from 35% in 1990 to 17%. President Biden's corporate tax plans and China's regulatory crackdown both suggest policymakers are trying to rein in the mega firms. And history shows, at the start of the last 3 decades, around half the top 50 companies have been new. So maybe they shouldn't get too comfortable.
All right, our big take story there on the rise of mega firms. Joining us now to talk a little bit about this is Dennis Snower, founder of the Global Solutions Initiative. They advise the G20, among other things. And I will say, I hope it doesn't embarrass you, a pretty famous Austrian economist, grew up, I think, in Vienna, then went to school in the West. What is your take on this, Dennis, when we see, you know, the top 50 companies now have 28% of global GDP, and 30 years ago it was only 5%. You know, 30 years ago they invested almost 10% in capex. Now it's only 3%. So everything seems to be going in the wrong direction.
I think we are entering a new world, and we will need to adjust to it. Big companies are making huge profits for the simple reason that users often do not have rights to the data about themselves. And if users got more control over their data, then you'd see a totally different economic development. Also, this new world that we're approaching is one in which there'll be radical shifts in the labor market, and therefore having adaptability built in policy will become incredibly important.
So what can be done to rein in these, you know, giant mega tech firms? One suggestion has been, of course, to raise corporate taxes, to have a global minimum tax on, I guess, the more radical end of the spectrum. There's a lot of talk about breaking up some of these companies. What would you suggest?
I think breaking up the companies would be terrible because large companies manage to serve large user networks, and the larger the network, the more valuable it becomes. What's critically important is that users gain control over the data about themselves. So if you generate data about yourself, then you should have control over how that's used, on what terms you sell it, and so forth. Official data, like your name, your passport number, and so on, that needs to be authenticated by official sources so that you don't have multiple data identities. And in terms of data commons, where people get together to share data, there should be a fiduciary responsibility to people within those networks that it's only done for their purpose. And then I think you would break this mold. And the basic problem that you have nowadays is that these big tech giants have interests that are not well aligned with the users. And if the users got more control over the data about themselves, then they would be driving the system rather than the profit motive of the big digital service providers.
Dennis, will a lot of these big companies actually be broken up?
I think breaking up the companies would simply dilute the networks and make it more difficult for users to communicate with one another across the world. One thing that we really have to guard against is the balkanization of the internet. That different systems, China, the US, Europe, each have their own systems, and that companies get broken up in accordance with regulatory preconceptions that are no longer adequate for the world that we live in today. The world that we live in today is we're moving away from an industrial world where machines and factories were the source of most value to a world in which data is the most value. And we need to change our thinking, and doing that will mean giving users control over the data about themselves. That has huge implications. Right. And if we follow that, I think everything else falls into place.
But Dennis, who would follow that? So this needs a regulator, right? This needs to some kind of authority to go after them. Who's the person that would take that on?
So it is governments that will take that on, and it is exactly parallel to development that we had hundreds of years ago when we went from indentured servitude to a labor market where people could trade their labor services freely. Now we want to give users control over their data so that they can trade freely and thereby empower the market system. So if the EU became the place where this happened, that would attract a huge amount of economic activity to the EU, just like economic activity was attracted to Great Britain and the Netherlands in the early stages of the Industrial Revolution, where labor markets became free. Well, that is, I think, where thinking needs to go.
Dennis, I'm so glad that you mentioned the labor market. I do want to talk about the labor shortage we're seeing, not just here in the U.S. where I am, but globally. Do you think generous fiscal policies are contributing to that, and how do you fix it?
I think clearly generous fiscal policies are contributing to labor market shortages, and the way to fix it is to focus on adaptability. The problem nowadays is not a standard Keynesian recession, and therefore we definitely don't need job furlough schemes and so on. What you need is to train people for the jobs of the future. And we are entering a world which will be much more digital. Technological progress is driving us into new areas. And so instead of job retention schemes and furloughs and help for struggling businesses, what you need is help in adaptation to new situations. So therefore, active labor market policies and their equivalent in the capital markets, financial markets.
I'm glad you brought up Keynes, because you are quite literally an Austrian economist. I know you ended up at Oxford and then Princeton, and you're an American and a German citizen, etc. But it doesn't seem that the disciples of Hayek even exist anymore. What happened to the school of thought that pushes back against Keynes that we saw so strong in the 80s? Where are those economists now?
Well, you have development in economic thinking. After the war, Keynes played an important role because he recognized, and in the Depression particularly, this problem of excess supply. And you need to pump prime economies to increase demand. And then in the 70s, 80s, we had the neoliberal revolution, which understood that the market mechanism is a powerful force for change. And now we need to come into a new way of thinking, which is when you have excess supply in some areas, jobs that aren't coming back, and excess demands in other areas like medical equipment, tech, delivery services, then you need to rematch the demands and supplies, enable people to get new skills that are relevant for the future, and the skills are not ones that can be taken over by machines. So, you know, what are machines good at? Machines are good at routine jobs, foreseeable jobs. What people need to do is combine their technical abilities with interpersonal skills. Machines aren't good at interpersonal skills. Machines aren't good at taking responsibility. Those are the human skills that are needed for the labor markets of tomorrow, and policy should focus on that.
and empathy. Dennis, thank you so much. Dennis Noer there, founder of the Global Solutions Initiative. Now, coming up, the U.S. proposal for global corporate tax gaining steam. More on that next. This is Bloomberg.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I do believe there is potential for agreement on these matters. I do believe we are going to see change across 2021 and 2022 in relation to how very large companies are taxed. I believe the likely way in that change will be reached will be inside the OECD. And of course, the impetus of President Biden and Secretary Yellen to change how American companies are taxed is an important dynamic in the process that's underway now in the OECD.
That was Irish Finance Minister Paschal Donohoe speaking to Bloomberg's Maria Tadeo from the Eurogroup meeting in Lisbon. And of course, that follows the Biden administration now pushing for a 15% global minimum tax that is lower than the 21% they were asking for previously. Joining us now is Bloomberg's editor-at-large, Marty Schenker. Marty, so a lower than maybe wanted 15%. How does that complicate the push for a 28% domestic corporate tax rate in the U.S.?
Well, it's an interesting compromise. What I think the Biden administration is trying to do is get the global minimum tax out of the way, then pivot to the much more complicated and difficult higher corporate tax rate in the U.S. They say 28%, but that's probably not going to happen.
Marty, overall, so do they just want consensus? And is 15%, something that will achieve consensus amongst OECD countries pretty quickly? And is there, though, after that, is there a danger that 15% then kind of becomes the maximum around the world?
Yes, as you point out, Fran, the Bloomberg Opinions, David Pickling pointed out that, ironically, by setting a 15% target for minimum, you actually may cause a rush to that level globally, so you wind up having a maximum of 15%, which undermines the whole effort.
Wouldn't it be great if countries around the world set their own tax policies, Marty, and then competed the way states in the U.S. did for those companies that they want working there. For example, Ireland has a 12% tax rate, and it's drawn Apple and Google to its shores, and they seem pretty happy about having them there as well.
Yeah, I don't know. You know, it may be great for the corporations, but for the countries in which these companies really base their operations, it's considered a missed opportunity to gain tax revenue. And as you know, the competition within states on tax rates was really kind of a destructive effort that undermined states all over the country in various spots. So it would be somewhat chaotic if every country was able to establish their own tax rates and competed for corporations.
Marty, I want to pivot to foreign affairs because, of course, we now have a ceasefire in place between Israel and Hamas. Will the Biden administration now take a back seat to that conflict and focus elsewhere in the Middle East, like Iran, for example?
Well, it's clear that the Biden administration doesn't have a comprehensive Mideast plan. They're sort of behind the scenes from the beginning of this conflict. There's suspicion about the U.S. based on Donald Trump's very close relationship with Israel, so they don't have any standing with the Palestinians. So it's very hard to see any way the U.S. could play an important role in solving the generational conflict in the Mideast.
Marty, thank you so much. Our Bloomberg editor-at-large, Marty Schenker, joining us today. Now, coming up a little bit later on Balance of Power, we'll be speaking to the IMF Managing Director, Kristalina Georgieva. That's at 12 p.m. in New York, 5 p.m. in London. She's pretty punchy usually about taxes, so it'll be interesting to get her thoughts on the latest Treasury proposal. This is Bloomberg.
Really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Tom Keene, co-anchor of Bloomberg Surveillance, now joins us. Tom, I really kind of want to ask you about puppy training, but I don't know if I can make a parallel between puppy training
the answer is get a second dog. Get a second dog. If you get a second dog, it takes the pain of the first dog away.
Not going to happen. You're focusing on labor participation.
Yeah, I am. I'm focusing on the American recovery and, of course, the European recoveries there. I know Matt's living that in Germany in spades. Here, the best chart is 25 to 54. This is the heart of the American labor economy and the participation rate, the ugly collapse coming off the crisis of 2007, and then that grudging recovery that we saw that was given up for the pandemic. And it sort of says, Francine, like where we are now. This is lagging data. That's going to get a lot better in the coming months. But that's a beautiful representation of what we've got to get back to and then where we need to excel to try to get back to the morning in America of 2006.
Yeah, and then always look at whether we're creating quality jobs that people actually want. I can't find a dog trainer actually in London. That's a job that is just,
Matt, she doesn't want to talk economics, finance, investment, and international.
I understand. Relations. She wants to talk about the new puppy.
Yeah,
that's what I would want to talk about too if I had a new puppy.
And I really think it shows really the opportunity here, Francine. Seriously, in America, the event is Chewy. And Chewy has just been, just extraordinary as a success away from Amazon. It's really one of the few stories in pets away from Amazon.
Yeah, it's a big business story. See, I do want to talk business, Tom. I mean,
Kaylee, that was
You're also looking, I imagine, at taxes and some of these loopholes.
I'm looking at some of the tax loopholes. I think it's, I don't know what to do with that story, frankly. I mean, we came from 21% down to 15%.
Okay, well, we have full analysis throughout the day. Our Tom Keene, co-anchor of Bloomberg Surveillance. Kaylee, what are you watching for the rest of the day?
Well, what I'm going to be watching is any dogs available for adoption in New York City, because now I really want a puppy. But deer earnings are coming up in just a couple of minutes. Watch for supply chain issues. That's what I have my eye on in the near term, Matt.
I am watching the Ford F-150 Lightning launch. Actually, it's sort of dripping out over the past couple of days because Biden kind of sprung the launch on Wednesday. But, I have always wanted a giant, naturally aspirated internal combustion engine. This thing, though, looks pretty good. I may go green with this thing.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
All this money sloshing around, these incredibly low interest rates, I think we risk an inflation surge.
If the economy stays as strong as it is, fueled by all of the stimulus that was put behind it, you get inflation.
The Fed is likely to start to shift their policy stance in the coming months.
We've never had a situation historically where the Fed has not begun to normalize rates and there's an inflation concern in the markets.
No one knows if these inflation pressures are going to prove more transitory or less transitory.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From New York City, for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg Television alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Equity futures up 0.25%. We advanced 9 points on the S&P 500. Call it 10. Tom, another week of inflation obsessions. And yet this week, 10-year break-even to having their biggest weekly decline going back to September of 2020. You don't hear much about it.
You don't hear much about it. I think that's dead on, John. The economic research notes this weekend as we go into Monday are going to be really extraordinary. To me, the operative economic word, and John, this is jargon, it's a pro word, is it's been a nudgy week. It's been an incredibly nudgy, goofy week. I want to focus on one thing, John, and I love what you said about real yields. As you go to the real yield, look for that, folks, an expanded edition this afternoon, 90 minutes. John, I'm going to look at the wall of cash out there and the action of the NASDAQ in the last few. Nice promotion there. Thank you. On radio, we're promoting the real yield today at 1 p.m. John, the NASDAQ's a moonshot, up 4% off the mat 2 days ago.
Inflation expectations come in a little bit. Tech rebounding just a little bit. We've spent a lot of time talking about peak growth expectations. We started the conversation earlier this week by discussing that maybe have we seen peak inflation expectations? How will we guide our way through that debate in the coming weeks and months?
To me, it's open, and we can go on with that today, and I'm sure we will as well. But John, the one I think you had the number $280 gazillion. To me, it's the pendulum of ginormous cash that's out there. I'm not suggesting it's going to go into speculative assets because so much of it is a deadweight conservative idea. But I think the theme into June is this ginormous cash that's there. So ginormous, John, is CFA level 4.
Thank you, TK, alongside with Nudgy, CFA level 4 as well. Cash on a sideline, almost cliche, Lisa, but wow, there's a lot of cash on the sidelines.
And part of the uncertainty here lies in who has that cash. Is it the lower income workers who've gotten checks from the government who are putting it in their savings and are more likely to spend it? Or is it the wealthiest individuals who haven't gone on vacations who are less likely to spend it because it's going into their wealth buckets? And this, I think, is one of the biggest disparities among economists with both the highest and the lowest GDP estimates this year.
They are going on vacations. Have you tried to book a vacation? In this country?
Yes.
John?
They are going on vacation.
They are. But how many vacations can you take to make up for last year?
Quite a lot,
TK. We're going to test it.
I'm trying.
I've hardly been off this year myself.
Yeah, sure. Yeah, right.
Can I get the orange juice?
Aren't you off on Monday again? Haven't you got another day off coming up?
I was scheduled, but I had to take that back because Afterthoughts going to camp. She's going to Camp Gulfstream. It's up in Labrador, just below the Arctic Circle.
Why were you jet shopping for me yesterday, Tom? Really?
Well, this is the prosperity that's out there and the consumption that's out there. You talk about it, and I'm sorry, seriously, Lisa, this is a linkage of the goods-producing sector, like the airplanes to get you up to the lodge, into the success of the service sector, like what we do. And John, that recovery is evident.
Yeah, I'm just going to turn to the price action. I'm not getting into your shop in a private jet. Equity futures up 9 on the S&P this Friday morning. Good morning to you all. We advanced 0.2%. In the bond market, yields just a little bit higher on the day. 163.52 is where we are right now on 10s. In the FX market, euro-dollar totally unchanged. Euro-dollar unchanged at 122.27. I'd call it that, to be honest with you, Tom. WTI, 62.64, up about 1% or so, Lisa, this morning.
I want to just set the record straight. I do not shop for private jets. Tom put that out there, and I will just argue I can drive a car. I am not qualified to drive an airplane, nor would anybody want me to do so. What I'm watching today, though, is the manufacturing of things like airplanes and other goods, factories coming out.
Right,
thank you. I really tried that.
Nice
the segue. Did it work?
Yeah, it worked.
All right, 9:45 a.m. Eastern time. We're going to be getting the U.S. May PMIs for the United States. This comes after some European data on the PMI, on the manufacturing sector, and this really goes into the higher costs of materials. This idea that it's rising to the highest levels or rising at the fastest levels that we've ever seen. How much does this crimp output? How much does this actually put a damper on factory production? And this, to me, is one of the conundrums with longer-term inflation. You get higher costs of these base materials. How much does that slow growth in the longer term? Meanwhile, 12:15 p.m., the Fed's Kaplan, Bostic, and Barkin are all speaking at a technology conference at the Dallas Fed. Very interested to hear the future of work. How much does the technological advancement that we've seen over the past 12 months really affect either growth in the job market or perhaps even a stagnation with respect to who gets jobs, how many people can be employed, and jobs that may be replaced by computers? And then also today, Joe Biden will be meeting with South Korea's President Moon Jae-in. I'm very interested, first of all, to note that this is the second meeting that Joe Biden has taken at the White House following Japan. Talk about the emphasis on Asia. And second of all, the strategic importance of South Korea with respect to China negotiations as well as North Korea, John.
Lisa, thank you. Looking forward to that. Are we going to cover this corporate tax story at all?
Yeah.
You doing that this morning?
I think so. Let's do it.
15%? Is that the new minimum the United States is looking for?
That? I mean, how are they going to line up X
They're
number
trying to get Ireland to come
that?
up from 12.5. I've got
Which
no
they're gonna
idea
do.
if Ireland comes up from 12.5.
Why would they do that?
And I had some sympathy for Matt Miller's argument on the early edition of Bloomberg Surveillance this morning, making the argument that shouldn't Ireland be able to make its own decisions on where its corporate tax should be?
Yeah.
Why should they agree to that?
Yeah.
Why should they?
I find the whole thing odd, to be honest. I mean, is the right word quixotic? Is that how you pronounce it?
I can see why the U.S. administration wants this to happen. I just don't know why Ireland would want to come along for the ride.
But did you see Maria Tadeo's interview with the Irish foreign minister? Basically, he came out and said that he could see something actually working out mid-year. They seem amenable to some sort of international tax hike because it's not 21%.
At 12.5, maybe. Maybe that should be the minimum.
Fair.
I mean, at 21 wasn't getting it done. 15's clearly closer, but they've had to come all the way down to 15.
I know. That's a good point.
From 21. Because Ireland's not coming along for the ride.
No.
This is the problem with these things. You can try and have these high-level conversations about things that should happen to try and put yourself at the epicenter of them. There is this thing called sovereignty still. I mean, is that lost on everyone, TK? Over the last 12 months,
I think it's
countries get to make their own decisions anymore.
I think we need an explanation here, John, because you've been leading all of the financial media and the idea of getting the London-New York corridor. What's the separation of Boris Johnson in London from the fractious, very dominant Conservative Party? I mean, I just don't. I am baffled by London vaccination politics.
There's a lot that I'm baffled by right now, Tom. And on the travel front, I am absolutely baffled by it. I have no idea why the Europeans are doing this without talking to allies. And I want to see that happen in a bigger way. I think it's great that the Europeans are doing this to get travel going again. But you need to be able to go to the United States too. You need to be able to reciprocate.
Yeah.
That's what I'd like to see. And I just haven't heard much about that at all. Where's the U.S. administration on this travel issue?
I don't
right
know.
Now, I haven't heard a
maybe
thing.
There'll be some clarity.
I haven't heard a thing.
Internationally, folks, there is a difference in New York. You can feel it in the last 2 days. Why don't you bring in Mr. Dacko?
I'll do that right now. Thank you, Tom. Greg Dacko joining us now, Oxford Economics chief U.S. economist. Greg, your read on the data at the moment. We had some PMIs out of Europe. Are we seeing the same dynamics play out in Europe that we've seen play out in America over the last couple of months?
Not exactly. I would say the U.S. is probably a couple of months ahead of Europe when it comes to the health situation, and that's being reflected in the economic situation. What we're seeing in the U.S., I think, is just a very rapid rebound in demand, and supply is taking a little bit of time to adjust, and hence the price pressures. The inflationary environment that we're seeing right now is really a feature of this strong demand and this gradual readjustment of supply. It's not a bug, and it's going to be with us for some time.
Greg, Oxford is acclaimed for acute GDP analysis. Are you going to recalibrate your view on GDP forward the next 12 months?
Well, we'll certainly do that at some point, because we know that any baseline is prone to be revised over time. But I think we're on the right trajectory. We have an outlook that's quite optimistic. We see growth approaching 7.5%, 8% this year, moderating to about 4.5% next year, and that along with about 8 million jobs being added over the course of this year. So overall, a fairly good take on the economy, led by consumer spending, which will be driven by the fiscal impulse, but also some use of the excess savings that consumers have put aside over the past 12, 15 months.
To describe it with CFA level English, ginormous pile of savings. What is the more likely outcome? An upside surprise in how much consumers actually spend of the savings, or a downside surprise as consumers use some of that cash to pay down delayed debts, as well as perhaps just get a cushion against whatever's to come?
I would say in the very near term, we're up for upside surprises. We have an environment in which consumers have a lot of excess savings. A lot of these excess savings are held by higher income families, which are likely to spend it over the summer. But we're also seeing that some of these lower income families have put aside or used some of the monies from checks to pay down debt. So there is some savings buffer there, and there could be some upside surprise, especially if these excess savings are considered income. If they're considered income, then they're more likely to be spent. If they're considered wealth, then they're less likely to be spent. Then over time, the wealth effect we know is very small. So the more they're considered income, the more there are upside risks to our forecast. We're expecting consumer spending growth to be about 10% this year, which would be a record. And that's going to push us well above the pre-COVID environment. So there are going to be these inflationary pressures as a result of this environment of strong demand. Again, as supply takes a bit more time to adjust, and the economy just takes a little bit more time to get back to a pre-COVID state.
Greg, got to leave it there. Always good to catch up, sir. Thank you.
Thank you.
Greg Dacre there, Oxford Economics Chief, US economist. The data out of Europe today, fantastic. Upside surprises across the board on the continent.